Good morning, everyone. Everyone's filtering in. Let's give everyone a few minutes to climb through the small door that Meetup provides. There they go. All right, there's a good threshold. Good morning, everyone. Welcome to the IBD National Virtual Meetup for 2024. My name is Jonathan Howard, along with your host, Amy Smith. We are very excited to put this program together today. We have 5 speakers for you, 5 of the best Meetup has to offer. So Amy's going to do an introduction. John's going to do a market review. Kathy's going to do a fantastic webinar on self-awareness. Greg is going to walk us through IPOs. Amy will come back and talk about the 2024 winners, and we'll end with Lee himself on early entry points. Take it away, Ames.
All right. You know, the Meetup program is near and dear to my heart. It's how we just have, we've all learned. We all are trying to study and learn and be better investors together. I'm really so grateful to these. We have the most amazing program today. You're going to learn a lot. I'm very grateful to the speakers that are joining us. And I think it's time to probably start with our first speaker here. So we have John Pokaraba. He has a degree from Rensselaer Polytech Institute and works as an architect for a leading firm in Boston, Massachusetts. He is the leader of the Boston IBD Meetup. He's the founder of the annual Blue Sky Investing event. In 2004, John started seriously applying the Canslim system and has attended all of the advanced IBD workshops. John is passionate about learning and teaching others how to invest successfully. He provides general market updates each Friday to keep people on the right side of the market via his YouTube channel at Rain King LLC. He's a regular speaker at the Boston IBD Meetup and has presented nationally at many other meetup groups across the country. So today, John will talk about what to make of this rally and what to expect in 2025. John, excited to hear it, and thanks for being with us.
You are host, John, if you want to turn your camera on.
Okay.
There he is.
And share screen. Everybody see that?
Yes, we can.
Okay. All right, let's go. Thanks. Whoops, I'm sorry. Thank you for the introduction, Amy. And it's exciting to be here. I want to thank everybody for coming, all the Meetup members and all the Meetup leaders. It's a great group to learn from. So again, I'm John Pokaraba. I'm with Rain King Insights, and let's talk about the markets. So everything we talk about today is for educational purposes only. All right, so we're going to talk about the really big picture, the secular bull market. Then I'm going to get down to the year 2024, and then a little bit more granular into the current market. And then we're going to talk about what 2025 might be looking like. Okay, so let's get into the secular bull market. All right, so this slide is just trying to show the really big picture. And when we look at bull super cycles, you know, they generally run for, 20, 25 years at a time. You can see the major low in 1942 had a major run up until 1967, at which point we went sideways for a number of years. But coming off the 74 low, we had actually a 26-year bull market into the dot-com 2000. And then we went sideways for about 15, 16 years. But if we look at the 2009 major low as the beginning of a new super cycle, we're about halfway through what I would call a super cycle. And the real question is, how much more is there left to go? What can we really expect? So that's what we're going to talk about. Now, a couple of the drivers. Now, taking a quicker look at the 1974 to 2000 super cycle, the market went up over a 10-year period from 74 to 83, but it wasn't until the catalyst of the baby boomers. And the baby boomers were entering what we call peak consumption years. They were starting that movement in 83 through 85. And that was a really a sweet spot demographically, a very large group of people. And as you can see, that's when things started to really move. Now, it's never a straight up line. There are bear markets along the way in 87 and 90 and even in 98. But the other major catalyst to the super cycle was the internet, the birth of the internet roughly around 1995, with all of these different factors, from the build out to browsers to email, et cetera. And that was the catalyst with the demographics to really kind of all come together into that super cycle. Now, I want to start to relate this to what I believe is the current super cycle. And really, we're talking about the millennials. Now, the millennials are just starting to enter peak income and expenditure years. The millennials right now are anywhere from 35 to early 40s. And you can just see by this Bureau of Labor Statistics, their income and expenditures are really in a peak range from 35 up to about 55. So over the next few years, the median age of the millennials is about 36 years old. Now, if we go back and just take a quick look at the 95 to 2000 run-up, this is that period where the baby boomers really were accelerating. Their median age of consumption and rising incomes was really this window between 1995 and 2000, when you can see that the median age was about 42 years old. So using that premise, the millennials, which is a huge demographic, they will be in this sweet spot of 42 years old as a median age, roughly between 2028 through 2034. So if we look at the super cycle, I believe that we are currently in, it started with the bear market bottom in 2009, and 84 million millennials entered peak consumption years. It started around 2019, and millennials started to turn 40 around 2021. And so we have this huge demographic similar to 83, 84 that's been building, and we have a catalyst. The catalyst is artificial intelligence, which the build out is just beginning now. And it's really going to take, many years to play out. So this blueprint of a kind of a 10-year initial run, then a demographic sweet spot, and a technology catalyst is all coming together. And to boot, we also have the Fed starting to move into more rate cutting. So we could have potentially another 10 to 11 years of this particular super cycle. So I'm going to come back to that super cycle at the end, but let's move on to the 2024 year in review. All right, I wanted to start with this line chart. This is the S&P 500 for the year. We started right here, beginning of 2024, at 4770 on the S&P. Now, I wanted to share this chart here. This is 20 different analysts on December, I think it was December 31st, what all these analysts were predicting for the S&P this year. And you can see here, these are some of the best of the best. You got Morgan Stanley in here, JP Morgan, UBS, a who's who of, I'll say, the experts in the investing world. The median Wall Street estimate for the S&P this year was 48.75. I've drawn that line on the chart way back here. And you'll see that there's at least 8 of the estimates that people had that was negative for the year. So 8 people said, these are the experts, said we will be lower than 47.70 on the year. And the highest targeted estimate we saw from this group was 53.75, which we've already far exceeded that. The point of showing you this chart is really to let you know that, don't get caught up in projections, even from professionals. This clearly shows that professionals did not nail it. A lot of them did not anticipate or were able to predict what happened in 24. And that's why we just watch price and volume, and we watch accumulation distribution, and we take the market as it comes. We had 2 small correction in the spring, 5.9%. And then we had a more intermediate correction in the late July, early August period of 9.7%. So don't get too caught up on the news. Don't get caught up on what analysts are saying. They tend to be, can be just as wrong as the individual investor. Now, looking at 2024 as terms of the events of the year, this really started with the November rally, which really was where the bull market really took off. We had a very powerful push in November, December of last year to launch this leg of the bull market. And then at the beginning of 2024 is when we had some reports of sticky inflation. And this idea that the market was going to get 6 rate cuts in 2024 was kind of put on hold. And so the market definitely got paused early part of the year. We had a little bit of a sell-off. And then some of the leading groups, technology groups, on February 9th, the cybersecurity group actually topped out. And then we went through a period in March and April where I think we all recall that the Mag 7 were leading the Qs and the NASDAQ index higher. But if you were paying attention, underneath the surface, we were getting a lot of really bad market breadth readings, and we're getting a number of distribution days that were piling up. So even as the index was moving higher, all was not well and all was not lined up under the surface yet. And it wasn't until we had this reversal we had here that actually started the beginning of some of the rotation out of the Mag 7. And then we had our first pullback, about 5.9%. And it was at that time that the AI chip story was still in place, but there was also a lot of other stories relative to infrastructure. Power, electric power companies, cooling companies, alternative energy, all started to get some more headlines. Now, we still kept marching higher. It was in June of 20th that NVIDIA, the king of the semi chips, topped out. And it tried to regroup and build a base, and NVIDIA tried to break out on July 11th. It actually failed, which really marked the top in all the semiconductor stocks, which actually had a very, very sharp correction. They corrected almost 30% under the surface of the NASDAQ correcting, or excuse me, the S&P correcting 9.7%. I think we were all familiar with the August 5th yen carry trade sell-off, that sudden drop in the markets, which shook everybody up. Also, there was a lot of people calling for the Fed to take action, which never really happened. Now, what's interesting is in the fall, in September and October, this is typically seasonally the weakest period for the markets. And on September 19th, the Fed started its rate cut. It cut by 50 basis points. Now, under the surface, what was interesting was the cybersecurity and software stocks started to hit new highs, not the semiconductors, but cybersecurity and software. And the market also was hit with a lot of negative headlines. The market was trying to move higher, and it kept getting hit with a lot of headlines about port strike worries, Iran was attacking Israel, higher CPI reports, and then recently the ASM earnings report and semiconductor export worries. And what I saw in this was a very, very resilient market. Very bad headlines, yet the market did not collapse, particularly during a seasonally weak period where you'd expect the market to get into a lot of trouble. So that's really where we are in the current 2024 cycle. And really, I think it's important to notice the character change. In the spring, the indexes look good, led by the Mag 7, but we had a lot of weakness under the surface, which really was not a great launching pad. Today, I think the indexes look okay. They're not leading. I mean, the S&P is leading, and the NASDAQ, given its weighting in tech, is not leading. But the strength under the surface is very noteworthy. Breadth indicators are looking much stronger than they were way back in the spring. So there's been a character change even through a seasonally very weak period. All right, let's get down a little more granular into the current market. This is the S&P right around presidential elections. So this is looking at 2012, 16, and 20. What did the S&P do? Right around 2 weeks before the election is where we are right now. And in 2012, we sold off about 8% in the S&P. 2016, it was 4% and change. In 2020, we also had a sell-off of almost 9% right before the election. So it's the last 3 elections have had this kind of 2-week sell-off with a lot of uncertainty and people taking their bets off the table. But you'll also notice that once the election had passed, you have a very sharp bounce in recovery from that initial uncertainty. So it's just something to keep in our minds because we're in that window right now. Now, the S&P on a more granular level, this is a daily chart. I just put a 4% pullback before the election would put us right around the 50-day simple moving average, which is this red line on the chart. As far as the action in the S&P, and it is the leading of the indexes right now, we've had a little bit of distribution. We had a distribution here. We have had a couple of stalling days as well, but not really severe. So I think these are kind of light stalling days. We shouldn't ignore them, but I wouldn't put too much weight on them. What I'm looking for really is in the next couple of weeks or so, we really want to see a blue accumulation day that would kind of negate this mild stalling at new highs. You'll notice that we haven't had a really big blue spike above the moving average here until going back into this September period. So we'd like to see that. Now, even with the indexes kind of going sideways and stalling a little bit, I plotted the New York Stock Exchange new highs and new lows, and you'll notice that we're still getting net new highs on the New York Stock Exchange. So there's no spike really in new lows that we saw during other corrective periods. So I think that's a positive, showing that under the surface, the breadth is still hanging in there. So I think it's still constructive, though, you know, in the short term, the next week or two, we still might have some weakness. Again, looking at breadth on a very simple basis, looking at a weekly chart of the S&P. This is the New York Advanced Decline Line. And very simply, the Advanced Decline Line continues to rise and is confirming new highs in the S&P. And at the S&P level, the percentage of stocks above their 50-day moving average is still at healthy levels. You can see if it's been grinding its way higher. Even though we've had some softness in the last week, we're still around 64%, which is still a healthy level above the 50-day moving average. So that's still both good confirmation that things are decent under the surface. Now, on the sentiment side, and I don't use sentiment as any sort of primary indicator, it's probably tertiary at best, but a couple things. There's a little bit of froth. A couple of weeks, this is the AAII, the American Association of Individual Investors Survey, which comes out once a week. You know, it was showing in early October kind of some frothy levels, really a lot of bulls versus bears. It's come down a little bit in the past week, but this usually the crowd, the individual investor tends to be wrong. And you can see they were kind of loading up a little bit in here, and now we're starting to see a pullback. Now, I've also plotted the equity put call ratio on the right. And, you know, just to try and simplify all the squiggly lines, generally above this level, this green level line here is typically means there's heavy fear in the market. And below the red line I use is really low levels of fear. So you can see we've been on the lower half of this graph for a while. It means there's not a lot of fear yet. So this pre-presidential sell-off or correction might bring the fear levels up, which would actually be a good setup as we go into the seasonally strongest period of the market, which is November and December and January. Now, what's most important is you have to be paying attention. This chart is a plot of the NASDAQ composite, and it's showing all the breakouts in the leading stocks since October 3rd. So you'll see these are the leading stocks. These are the stocks that are acting well. Leading stocks tend to come out in the first 12 weeks after a follow-through day. Now, I've also plotted on the chart in green, all these ones in green are what I call the young guns. These are IPOs that have happened in the last 3 or 4 years, and they really represent new merchandise. And we always want to be looking for new names and new merchandise with great stories and earnings and sales. So you can see there's quite a few names that were breaking out in August. So if you weren't paying attention, you should look at these stocks to see where they are in their charts. And Greg is going to give you a nice talk today on IPOs of the year. So a lot of big names. This is the pond we want to be fishing in, and always following the action of the leading stocks. All right, let's look a little bit at 2025. Now, coming back to the super cycle that I started with at the beginning. So I've just plotted a S&P chart. This is where we came out of the bull market started. The bull market started, believe it or not, in October of 2022. And then here's where we are today. We're October of 2024. And the S&P this year is up about 22%. So using the premise of the millennials being a driving factor of the demographics moving into the sweet spot. You know, the projection of where we are through the super cycle, which is about halfway, looks that we could have some targets for the S&P looking out to 2035. Again, these are just targets back of the pocket to have in your mind, because you probably wouldn't think that maybe the S&P by 2035, 150% move from where we are today could bring the S&P over 10,000 from the June 23rd levels, and also a 200% move, which is consistent with other super cycles, could bring the S&P, believe it or not, to 13,000 and change. So it won't be easy to get from, you know, where we are today. It won't be a straight line up to 2035. There's going to be bear markets along the way. We know that bull markets typically last, you know, 2.5 to 3.5 years, and bear markets typically last 9 months to 18 months. There's probably going to be a couple of them along the way in this path to higher levels in the S&P. But I'll tell you, I think right now we've got a very good setup in for 2025. I like what I'm seeing. We certainly have the theme of artificial intelligence, robotics, personalized medicine, cryptocurrency, autonomous vehicles. It's really an exciting time, technology that's going to potentially drive new innovations, new companies. As I mentioned also, the Fed rate cutting cycle is just getting underway. So that could be another part of the catalyst along with the demographics. So I see this as a positive picture in terms of fitting into the super cycle narrative. Now, I wanted to bring you back one more time as we talk about 2025. This is the NASDAQ composite, 1994 through 1997. 1994, if you know your market history, was pretty much a sideways years in the NASDAQ, and it was a year of rate increases in the Fed. Not a good year in the market. It was a tough year. But right in 1995 is when the Fed started cutting rates. They started cutting rates, and as I mentioned, the major theme that was emerging was the internet build-out, which went on for a great 5-year run. So a great combination. And where are we today? Well, we've come out of a bear market. We've had a leg up in the market, and we have the situation here where the Fed is starting to cut rates. And we do have a major technology theme. The AI build out, chips have been leading early. It seems that data centers are on the way, and the power companies are going to be in a lot of growth mode. And even nuclear power is getting some attention. So it's a similar setup in my mind. No predictions, but I think it is giving us a good picture going forward in 2025. All right, so as I mentioned, we're kind of at 2 years into the bull market, and bull markets can last 3, and sometimes they last 5, 6 years in really strong markets. We are entering the best seasonal period for the markets, which is November through January. So that's on our side, which helps. Fed rate cuts. We know that Fed rate cuts tend to help the small and mid-cap names. And if you've been following the market closely, small and mid-cap names have really been sideways for a number of years, and they've been lagging the market. Could this really be the next leadership leg up? It's a possibility. If you study Fed rate cuts, slow but steady rate cuts are actually more productive to a bull market than a panic rush by the Fed to cut rates steeply and quickly. So we might get a slow-paced, consistent period of rate cuts, which could be good for small caps. Rate-sensitive stocks should benefit also in 2025. Home builders, Rocket Mortgage, these are some of the mortgage and lending companies, Upstart, Blackstone, some of the financial companies, and C1, which is another provider to financial companies with software. Now, in any bull market, at least in the last 20, 30 years, we need technology to participate. And technology is, kind of mixed right now. I mentioned that software and cybersecurity are near new highs, but the chips are still well off their highs. All of this may come together in the future. We'll have to see. But the chips, you're probably familiar with a lot of these names. ARM is something that came out as more recent IPO. Data center gear and cooling, I think, will continue to be a factor. And even old companies such as Oracle actually are well positioned to be data center and AI leaders, as well as companies that focus on cooling and components. There's a lot going on in innovation there with some younger companies. Security, Fortinet's a leader right now. Utility infrastructure. So not only the power, electric power companies such as CEG and Vista, we're also seeing nuclear power kind of have a rebirth. So that a lot of deals being cut with a lot of the power companies to provide nuclear power or small nuclear reactors. So I'd keep an eye on some of these small nuclear reactor companies. CEG is a large player in the nuclear space. And after the build out, happens, we're gradually going to see even more and more companies create software for big commercial applications, as we're seeing with Palantir. And eventually, there'll be more software applications for retail investors to take advantage of AI. So I've just listed a number of companies to keep your eye on there. And the other real, I'll say, potential boom is money in the sidelines. There is 6.4 trillion, that's with a T, that is sitting in money market funds collecting from higher interest rates. If the rates come down in 2025, money is going to move out of money market funds, and that is fuel for the bull market for maybe a really good leg up in 2025. So that's my talk on the market. I wanted to remind everybody that our Blue Sky event will be happening in 2 weeks from today. We have a great list of speakers. You can see here, we've got our featured speaker, Jack Schwager, will be joining us. And we're going to share a side of Jack that probably nobody's ever seen before. So a lot of great stuff there. There's a webinar link, but just go to my Twitter page and we'll be emailing it out to all of our membership, etc. But put this on your calendar. It's a great event. All right, that's the general market update for October 26th, 2024. Back to you, Amy.
John, that was great. Did I tell you guys we were in for a treat today? And indeed, we have started off with the general market with John. Great insights, John. Question here from the group. You were talking about the presidential election cycles and historically how the market has reacted in different time periods. How about earnings season? Have you looked at anything about how the earnings seasons tend to do during presidential elections? A couple weeks out, or because we're getting into the big names, we're getting into the Mag 7 and all these big names coming up. But do you have any historical look at that?
Yeah, I have not looked historically at earnings as they relate to the presidential cycle. I think you've got to really just look at earnings for what they are. It seems that Wall Street is looking for not only sales, but they're also looking for earnings. And you really have to be aware of when your company reports, because you really want to have some cushion because they can be extremely volatile. And you're right, we're going to go right into the teeth of it right now. So we kind of have a little bit of a downside bias with the presidential election. So it'll be very interesting to pay attention to how growth companies, what is the reaction from Wall Street? Does it ignore the brief sell-off we might see before the election, or do things really get bad reactions? So it'll give you a little bit of a tell in how the market is looking either beyond the election. We don't know. It's going to be such a close election. We don't know if the election will be decided on the night of the election, or it might go on with some recounts for a while. So I have not done a study, though, of specifically earnings in proximity to the election.
Well, not surprising, John, but in the chat box, we're getting a lot of great job as always. Really appreciate you putting this together and giving us not only, reasons why the demographics might lead us, forward and what we can expect, but taking a look at those historical periods too. So thank you so much. I appreciate it, John. Excellent stuff. Make sure to join him at the Boston IBD Meetup. If you're not a member of that group, it's excellent.
Thanks,
John,
Amy.
thank you so much.
Well done, John. Amy, you were almost too excited to get started. Do you want to go through the map and some of the better groups?
I do. Jonathan, we can hardly hear you. I don't know if you have your mic turned on low or something, but I'd be happy to go through some of the groups we have here. And I also have a slide, Jonathan, with some of the other groups on it when I get to my presentation. But you can see here, some of our speakers here, we've got the West Coast over here where some of us are located. We've got the Midwest, and we've got Kathy there. We've got the East Coast, and we have Greg Morton, and we have John Pocaraba, and who am I leaving out here? And Lee Tanner here is on the West Coast. This is one slide that we have. I have many more groups for you guys to take a look at when we get started in here, but get out your cameras. Be sure to take a picture of these. These are groups that we have. They're fantastic groups. And I'll tell you more about them individually as well as others when I get to my presentation. And we have a deal for you today just for the meetups. Make sure you do this. If you haven't tried, especially like the Market DM, maybe you just haven't given it a try yet, you can try the whole year for $20. Most of you on here probably get the IBD digital, but you can certainly try 3 months for $30. You can go, guys, to the very popular IBD Live. You can do 3 months for $9.95. And then, of course, yes, everyone will make fun of me. My favorite, the Market Surge, used to be the Market Smith. Premium charting service, could not invest without it. I use it every day, all day. You get 4 weeks for $24.95. So these are specials today. And to get them, go to investors.com/meetupdeals. Okay, Kathy. Kathy Donnelly received a degree in electrical engineering from the University of Houston. In 2006, she read William O'Neill's book on how to make money in stocks, and she joined the local IBD meetup. In 2018, she co-authored a book, The Life Cycle Trade, specializing in winning at trading IPOs and super growth stocks. She has always been passionate about post-analysis and improving her stock investing skills. Today, Kathy manages her own money while pursuing her fitness goals. She is a 3-time Ironman finisher. You go, Kathy. She is a frequent guest on the Investing with IBD podcast and IBD Live, and she also is featured in the Trader Lion IPO Masterclass along with her co-authors. Kathy is going to talk to you about improving your trading with self-awareness. So Kathy, thank you so much. Here we go.
Thank you, Amy. Can everybody hear me?
Yes, we can.
All right, great. So let me just share my screen. All right, well, I'm happy to be here. Thanks for having me, IBD, and thank you all for attending and being here. I'm going to do something a little bit different. I'm going to talk about self-awareness, improving your investing with self-awareness. So a lot of people may already know me as the co-author of the Life Cycle Trade, but I am also an investing coach, and some of the things that I learned I want to share with you today. So quick disclaimer, obviously this is all for informational, educational purposes and so on and so forth. And I've got like 3 crazy disclaimers here, but you know what they all are. But for those that don't know me, let me just share a little bit more about me. So I've been a Canslim investor since February 2006, and I've attended pretty much all the annual IBD seminars. When they were live and in person, I used to go every year to California and see the level 4 with Bill O'Neill. Already mentioned about the life cycle trade and also an investing coach. A little bit about my investing style. I am a long-term trader for the most part. So long-term for me is 1 to 1.5 years. I really want to catch that first stage base and hold it for the big runs. So 100% or more if the opportunity is given to me. I retired from corporate America in 2017 to trade quote unquote full-time. And I say in quotes full-time because when I worked in corporate, then when I went home, I was working on stocks and I would try and follow it as I could on my phone. And even though now I'm retired from corporate and I trade quote full-time, I'm still really part-time because I train for Ironmans and I go bike riding and I have lunch with friends. And so it's still kind of like a part-time situation. But yeah, I'm a 3-time Ironman finisher. This picture here is a picture of me when I completed my very first Ironman in 2018. It was very special. And so I wanted to share that. And of course, I mentioned an active lifestyle. Okay, so this is what we're going to talk about today. I'm going to start with a little bit about post-analysis. And for those that know me, you know I'm very passionate about post-analysis. It was something Bill always imparted on me or I gathered from him, got to really learn from your mistakes so that you can improve and get better. And that's what he did. And that's how he was able to develop this system that we have. And then we'll really focus on self-awareness and talk about investing thoughts, feelings, and actions, and then a little bit about a trading journal. Okay, so when you do a post analysis, these are some of the questions you ask yourself. Did you sell too soon or hang on too long? How did the stock behave after you sold the stock? And how was it acting when you got on board? These are all the things that you want to make notes and note down so that you can understand why you took the actions that you did. But very important, and I've got this next one bolded here, did you let your emotions take over and stubbornly stay invested in seeking stock rather than cut your losses? We've heard about trading psychology. There are many books out there on it, but it's really your feelings and emotions that cause you and what you act and what you do. And so that's really what we're going to focus on today, and how you can maybe tweak that to help with your investing. And then of course there's how was the overall market acting when you're making your particular trades. Was it in an uptrend, a downtrend? And really by looking at your trading behavior, you can really refine your skills and avoid repeating mistakes. Okay, so I just wanted to highlight, this was the very first podcast I actually ever did on the Investing with IBD podcast show back in 2020 with Arusha. And I really focused on post analysis. So that's why I wanted to share this for those that may not have seen it. It's still on the website, and you can learn a little bit more about how I approach a post analysis, because I really feel it's the #1 thing that has improved my trading. It's really about what is the root cause? What was the first thing you did wrong when you were doing a trade? And maybe you made 10 other mistakes after that one thing, but it was really the one thing that happened first that you really want to figure out, because then that would have avoided everything else. And maybe there's nothing else that really needs to be fixed as long as you finish that very first thing that went wrong. So it might simply also just be a thought that needs to change. And again, that's what we're going to focus on next, versus a fundamental or technical issue. Okay, so what does it mean to be self-aware? Well, these are just 3 bullet points from the Webster's, Internet Dictionary. Being aware of oneself, including one's traits, feelings, and behaviors. So I've got that one highlighted because, again, I'm focusing on feelings and behaviors. The next one, of course, aware of oneself as an individual that exists in the real world, right? Just being self-aware of our surroundings. And then the last one focuses on aware of yourself as an individual, of being your own being, and again, actions and thoughts. So let's dive in here. Let's see, here we go. So have you ever said to yourself, oh, I shouldn't have done that. Why did I do that again? I hate this market. I missed the buy point. I lost money again. It keeps happening to me. Why does it keep happening to me? It's still not working. Why did I buy that? Why did I sell that? Well, I'm here to tell you nothing happens to you. Everything is neutral. So the market is neutral. The market going up and down, that's just what it's doing. It really has no effect on us until we have a thought about it. So the market could be going up and I'm going to be super excited and happy. My thought is I'm super excited and happy because I'm a growth investor and I want it to go up. But if I'm someone that only likes to trade on the downside and the market's going up, I'm going to be like, this is a horrible market. I'm not making any money because I prefer to make money when it's in a downtrend. So see how just those 2 different thoughts can make it either positive or negative? The market is neutral. So that thought then generates a feeling. So if I'm thinking, awesome, this market is going up, I'm happy, then I'm generating the feeling of happy. And so my action is going to be, well, I'm probably going to buy some stocks, look for some cup with handles. And then the result is I'm going to make money. Okay, so here I have a cup with handle. So start thinking, this is a real cup with handle if you know what stock this is. And I'm going to have Amy and Jonathan check the chat and let me know if anybody gets it. So while I talk about this handle, you be thinking, but what is your thought about this cup with handle? Is it a perfect cup with handle? Is the volume where you want it? And I apologize, we don't have the volume here, so you just have to pretend. But normally we would look and see, is the volume above average volume at the right particular weeks? And this is a weekly chart, just to be clear, a weekly cup with handle. Would you prefer a shorter cup with handle? You know, some people like it to be exactly 7 weeks. Some people like longer handles, cup with handles, maybe 10, 12 weeks. They want more time. And then what is the market doing in this situation too? That also would affect your thought on whether or not this is a cup with handle that you're interested in. So everyone's thought about it is going to be different. Based on this, some people are going to buy it. Some people are going to pass on it. It's all about one's individual thoughts. And as we all know, chart reading is an art after all. Okay, I just want to pause. Is it possible for Amy to jump in? Does anybody know what chart cup with handle this is?
So there are a couple guesses here, Kathy, and someone has in here Google Alphabet, or another guess is NVIDIA.
No, this is Chipotle from September 2010. So I don't know if you guys remember, but this was, there were many articles about this one. And I think even Scott O'Neill had said this was a perfect cup with handle. He thought everyone had seen it and knew about it. So September 2010, Chipotle, check it out. Thanks, Amy. Okay, so let's talk more about thoughts and feelings. So some thoughts. Again, I hate this market. I lost money again. I missed the buy point. It's going up without me. So all these thoughts are going to generate feelings. I hate this market. Maybe I'm starting to feel mad. I lost money again. I'm going to start feeling incompetent. I missed the buy point, distressed. It's going up without me, exasperated. I'm sure we've all had this happen to us at some point or another. And with these feelings, then the actions that are generated from that is you're likely to have a bad rest of the day, possibly make more mistakes and tear yourself down. And that's the last thing we want to do, is tear ourselves down. So negative thoughts and feelings, you know, our brain has a mind of its own, thousands and thousands of thoughts all day long. We can't control it, right? It just happens. It can convince us that these thoughts are facts and that we have an indisputable reason to be sad, frustrated, anxious, or angry. And we can't control what our brain and our thoughts are thinking. But the good news is, we can't control our mind, but the good news is we control our thoughts by becoming more self-aware. So that's how it all ties in. Now, our prefrontal cortex in our brain is what allows us to see our thoughts. And we're like the only species that can do that. So if we now think about what are successful investor traits, you know, we want to be confident, we want to be courageous, capable, determined, empowered, fearless, grounded. These are all the things when I was thinking about, when I was putting this presentation together, what are all the things I want to feel when I'm trading? And these are them right here. So now a quick sidebar. I don't know if David Sato Chung's on watching, but I'll definitely make sure to let him know about it. This is one of my favorite quotes. All our dreams can come true if we have the courage to pursue them. And that actually is from Walt Disney. But David Sato Chung from August of 2013, and I just remember this because I've used it before. He said, spot great bases, then possess the courage to buy when the time is right. And I think that's so true, right? Because especially if the market's in a downtrend and then we're at the bottom and we don't want to believe the fall through day, we have to have courage to go in there and buy that perfect cup with handle. Okay, so now back to thoughts and feelings. So what if we changed some of our feelings then here? So it is a volatile market. It's going up, it's going down. What if we just were indifferent? You know, as I've been doing this a long time. Some of you have been doing this a long time. You just know it's a volatile market. I can't do anything about it. I'm not going to let it make me be sad or not even really happy. I just want to be indifferent. And then instead of losing money, you know what? I can preserve my capital. I'm grateful. I'm grateful I didn't lose more money. I'm so glad Bill taught me how to stop my losses so that I would be able to trade again. I'll have another chance. Optimistic. One of Bill's things that he used to say, you know, I never met a successful pessimist. So we all want to be optimistic. I have plenty of time, right? We never get in an exact bottom. There'll be another base. There'll be secondary buy points. I'm just going to be patient. And then with these thoughts and these feelings, then I can generate a different kind of action where I will not have resentment towards myself. I won't have negative feelings to myself, and I can move forward in a more positive way. Okay, so I just want to share with you where I got this from in case you're interested. So the life coach school model. So this model where you have a circumstance, that's like the neutral thing. The market, is volatile or whatever. And then you've got the thought, the feeling, the action, the result. So this was created by Brooke Castillo. She's the CEO and founder of the life coach school. And if you're interested in any of this, of course, you can reach out to me. But she has a podcast, and that's how I first learned about it. Actually, back in 2020, I started listening to podcasts during COVID, and she was one of the podcasts that I fell in love with. So if you're interested in any of this mind brain work, definitely check out her podcast. Okay, so now it's time to do a deep dive. So we have here on the left, the unintentional investor. And so here you see I've gotten bold the C, which is the circumstance, which is again, just a neutral thing. It's a fact. It could be proven in a court of law, right? Stock A broke out of a cup with handle. And we all know how that's defined. So it would not be able to be disputed. And then the thought again that we've used today, I missed the buy point. And then I'm feeling distressed. I beat myself up. I tell myself I can't do this. But we want to be the intentional investor. I mean, I definitely want to be the intentional investor. So again, the same circumstance, stock A broke out of a cup with handle. So my new thought is I'll have another chance. I'm going to be optimistic. And instead of beating myself up, I'm going to figure out how to not miss it next time. Those are the actions and steps that I want to take. So that my result will be, I create, in this case, create stop buys on all stocks I don't want to miss. And this happened to me. I mean, this seems so simple, but it's true. So as I mentioned, when I used to work in corporate, I had to use stop buys all the time because I was working during the day. I couldn't guarantee I would be able to look at my phone and make a trade if a stock broke out. And now that I don't work in corporate America, I still sometimes forget because I'm like, oh, I'll be home. I'll be able to, buy the stock when I get my alert. But if I'm going on a bike ride or I'm having lunch with a friend, I may not actually be looking at my phone. So I have to remember, I still need to create stop buys on all stocks I absolutely do not want to miss. Okay, I also want to focus a little bit on just reframing a few thoughts. We definitely don't want to compare ourselves to others because everyone's journey is different. And we don't know what happens in the thoughts that other people are having. We can only be concerned with what our own thoughts are and focus on our journey. Definitely, we don't want to focus on what's wrong with us because nothing is wrong with you. Everyone is inherently worthy just by being here on earth in this life. Dwelling on the past, everything happened exactly it was supposed to happen. You can look at your past and be like, oh, I wish all these things didn't happen to me, and kind of bring yourself down. But instead, think of it, you're the hero of your story. Whatever happened to you, you're here today and you keep moving forward and you keep having successes, no matter how small they are. You are the hero. Brooding over your mistakes. Instead of again, being upset about, oh, I missed it again or this out, let's get curious. How can I improve on this? And that's what I really try to do. Okay, why did I miss this again? Okay, I got to create the stop buys. Or, oh, I forgot, I missed the 3 weeks tight. I mean, you'd think a 3 weeks tight would be easy not to miss, but if you're in a hurry, you're going through your stocks, just get curious. Oh, okay, that's why I need to make sure I spend a little extra time focusing on this. And then the shoulds. I should have done this. I should have done that. I have this picture of, where you just keep bringing yourself down because you're like, should. Well, just you do your best, and show yourself some compassion. Like if I share with my friend how I missed this stock or, this is going on with me in my life, they would talk to me with compassion. They'd be like, oh, it's okay. You got this. You've done it before. Just think about what you would say to someone in the same situation and make sure to say it to yourself. Show yourself some compassion. And then second guessing ourselves. You just need to make a decision. No decisions are wrong. You just do it and then you test it. If it doesn't work, you think of something else. If it does work, you keep doing it. No need to second guess. Just test and repeat. The scientific method for those that are familiar. Okay, investing through a journal. So a complete examination of both successes and failures will teach you a lot about your investing style and strategy. This can obviously feed into your overall post-analysis, looking not only at your thoughts and feelings, but your technicals and fundamentals that you're using when you're buying your stocks and learning from that. But then also a thought download about your trading day. So you can ask yourself, how did my day go? Did I follow my investing plan? Why or why not? Did I like my reasons? And how did the market action make me feel? Were there external circumstances that affected how you traded? And that could just be like it rained that day. You didn't get to do your running workout that you wanted to. And maybe that even affected your trading a little bit. Or maybe, unfortunately, you had some, bad news from another perspective. All these external circumstances can also affect how you're traded. But nothing's gone wrong. That's just about being human, right? So write down as much as you can for a few minutes or longer, and then just pick one thought or feeling you want to work on for improvement in the future. You can select a specific factual, again, fact, something that could be proved in a court of law, to analyze. And then what were you thinking when that circumstance happened, and how did it make you feel? And then what you can think about is, well, I was feeling sad when this particular thing happened. And instead you can think about, well, how would I want to feel? Well, maybe I want to feel indifferent, or maybe I want to feel optimistic. And then you can work backwards and kind of come up with the thought that you need to think in order to feel optimistic. So you want to really take that time to be intentional. So applications for life, you can do this also with, I mentioned the past, like looking back on your past and being the hero of your story, but you can also do it into the future. You can think about being a successful investor, and what, again, does that take? Decide ahead of time how you want to think and feel as a successful investor. So what does that mean? Well, if I go back to those successful investor traits that I just talked about, you can go through and take the time to go through and think about all these feelings and what thought do I need to have in order to feel confident. So for me, it can be like, I did my post analysis, so I'm confident that this is the way I want to trade this stock. Courageous, I learned from Bill O'Neill that I have to buy on a fall through day, even if the market looks horrible. Whatever thought you need to have to feel all these things, write them down and then remind yourselves of them throughout the day, throughout the week. Okay, so let's do one more deep dive on the intentional investor here. Let's see. So you can start with just the feeling, as I mentioned. You can start with confident, and then you've got the result of the successful investor, and you got to think backwards. Okay, what do I need to think to be confident? So I can do hard things. I love this one. I use this one all the time. I can do hard things. That's going to make me feel confident. I'm going to take all the necessary steps to learn and keep at it. And I put in quotes, keep at it, because that's what Bill wrote in my book when he signed it for the very first time. And then the result, successful investor. Okay, so the best news ever, change your thoughts, change your life. One more thing about decisions, and I kind of said this a little bit earlier, but when decisions are based on a strict set of rules where each rule has been thoroughly back tested, you can generate confidence. I'm calling it a decision versus thinking you are following along, because no one really wants to follow along, right? I'm just going to do what he's doing. I'm going to do what she's doing. And that way I don't have to take any responsibility. But if you make a decision, that to me generates more confidence and courage, because I decided I'm going to do this and I'm going to do it in this way. And if that decision, again, isn't making you money, get curious. Don't beat yourself up. You identify it and modify it. And so from this process of post-analysis and constant reflection, a successful investor will emerge. Okay, so in summary, identifying the reasons for your thoughts and feelings will give you insight to your investing actions. Change your thoughts and feelings will fuel successful actions. And there's just so many more benefits of being self-aware. Better decisions, better investor, better friend, better person, better spouse, the sky's the limit. And starting investing thought journal will allow you to see where improvements can be made. And I just want to say one other thing about the brain. I mentioned this earlier. The brain's mainly driven by the motivational triad. Some of you may or may be familiar with it, where we're just really designed to seek pleasure, avoid pain, and conserve energy. So anything to be, investing is definitely hard work. So, we always want to divert to how can we, I just want to relax in my chair more. Well, that's how we're designed. That was the primitive brain. That's how we survived back in the day. But you change your thought to set a goal and you can do it. And you just go against that primitive brain and use that prefrontal cortex that I talked about. Okay, I got to share the quote that I mentioned earlier. I've never met a successful pessimist. So let's all be optimistic. Let's have the best year. John says we might have a good year coming up or so. So let's do it. So again, thank you, everybody, Bill, the entire IBD Market Search teams, and of course the Life Coach School, because that's really done a lot to change my life and getting my thoughts and feelings and in all aspects of my life. So I hope you got a lot out of that, and I hope it will help you.
Oh, Kathy, that was great. Thank you so much. I have a lot of chats saying you're so inspirational, you're so inspiring. Thank you so much. The journaling was a great idea. You're the hero of your own story is great. What changed the most for you when you were doing your post analysis? Where did that really affect you the most?
Well, and I share this in the Investing with IBD podcast, but that's really what defined my trading style. I share a trade in there where I traded ICE, Intercontinental Exchange. And when I was first learning, I bought and sold it like all the way to the top and thought I had made money when I actually had lost money. And I realized through my post analysis that if I just bought it at that, first stage base or whatever it was, and then just sold it at the top, I would have had like a 70% gain. And so that just really was what set me on the trajectory to be the long-term investor that I am today.
And we have one here for you, Kathy. Do you ever skip a strong trade when you have external problems in your life?
The only thing I've really had to, like a death in the family or something like that. I remember, the hardest thing is just to make sure I still go through my screens because, you're stressed out. You don't want to read the news of the day. You don't want to do anything. You just want to go to bed. But I still try to make sure to go through my screens every day. I don't recall ever missing a trade. But I do recall it being a struggle to continue to stay focused, even if it was just 5 minutes, something on the market during a difficult situation.
All right, that makes sense. And I have a question here. Great presentation. How are you incrementally changing your thoughts and beliefs? Little bit.
Well, I do a model almost every day. And it might not, and then it may not even be on investing. So when I say a model, like if I did something like, okay, I'll give a different example. Let's say I ate a pint of ice cream one evening and, I didn't feel good after. And then I asked myself, well, why did I eat that pint of ice cream? And I'm like, oh, I was feeling tired, and I was feeling bored. And so I didn't want to feel my feelings. Part of living and being a human is actually feeling the feeling and then again trying to figure out how you can maybe manage it. You can't avoid all feelings, right? Because that's just part of being human. But I have a notebook. There's my little journal right here, and if you go through it, you'll see I have lots of C's, T's, F's, A's, and R's, and I just write them down, just simply like that. And I'll do one pretty much almost every day.
Okay, great. And what percentage of your initial trades turn into long-term returns of 50% or more? Like how many trades do you take that end up being pretty good ones?
I've never actually figured out what that statistic is, but I would say at least one or two every year.
Okay. Well, everybody make sure that you join Kathy's Denver IBD Meetup group. This was fantastic. Kathy, thank you so much for that. I really appreciate it. I will show the groups again when I get to my presentation. And yes, there is a recording available of this. And thank you so much for the comment about my book in the chat. And now we're going to go on to our next presenter. And this is going to be Greg Morton. Greg Morton is a lifelong resident of Greenville, South Carolina. He and his wife have 5 children. Greg is an individual investor and started the Greenville Eastside IBD Meetup in the fall of 2014, a decision driven by the motivation to learn the Canslim system well enough to be able to share it and teach it. He also runs the Stockyard Meetup site for online meetings and has the Stockyard YouTube page, which has a variety of Canslim teaching videos on it. He enjoys teaching and educating. You can follow him on Twitter X at GregMorton512 for Canslim information, some humor, and keeping up with what he calls the coloring book, which is a daily Canslim market analysis. Greg was impacted by the hurricane, and so we're very glad that he and his family are safe. And we prayers to the other people that had a harder time. Greg will do an in-depth look at the best IPOs of the year. Greg, thank you.
Thank you, Amy. Let's see. How do I share my screen, Jonathan?
It's
So-
the middle of it, right? It says new share right next to Q&A. I will stop, see if that helps make it a lot easier. So right at the bottom next to chat, it says share screen.
Got it. Let me pick the screen. Did that give it to you?
It did not.
Oh, okay.
Looking good.
Should have it now.
There we go.
Perfect.
You're good
All
to
right.
go.
Thank you very much. Welcome, everybody. Appreciate you guys showing up. Kathy's got me fired up, ready to go. Jonathan didn't tell you at the beginning, there is a break in the agenda after me, so you will have a few minutes. I don't know how long we're doing that for. So I'm going to talk about some eat and run IPOs. Before that, since this is the National IBD Meetup Group seminar, I thought I'd just talk about those real quickly. I think one of the benefits of these is determining who you are. To be successful at Canslim investing, you've got to determine what your trading personality is. And meetup groups will help you do that because you will see different trading personalities. I can't do it for you. It's your trading personality, but I'm going to share mine and you can decide, yeah, that fits or that doesn't fit me. And this background's important for what I do with IPOs and really what I do for everything in Canslim. So it just boils down to three things. One, I'm Canslim, so I'm following Bill's system. I'm growth stock, which is kind of Bill's system also, and I'm a position trader. So that means I'm not a value investor, not Warren Buffett, not trying to do what he does, not a swing trader, not a day trader. I'm not a buy and hold investor. I am a buy and hold investor until one of my written sell rules is triggered, but that's not the way the world talks about buy and hold investing. But Canslim investors, we do buy and hold. There's a point to sell on every chart. Bill taught us that. So we do that. So this means every one of those letters in Canslim is very important to me. I want to invest in profitable companies. I very rarely will invest in any company that is not yet making money. They can't make money with their money. I'm not sure that I can make money with my money investing in them. I want something new. That's very important. I want liquidity, at least $20 million traded per day. More is better. I want the L. I want the leaders. I want the laggards. Ropel teaches us how the leader will do 50 to 100% better than the stock that's second in that industry. And we're going to talk about some of those leaders today, two of them in particular in restaurants and shoe stocks. I want institutional money, smoothing the water for my boat. They're the big boat. I'm just trying to ride in their wake. And most of all, I need the M to be right. This is the most important letter in Canslim. We talk about it at our meetups. John gave you a great overview on it. It's very important to me. And I track that daily on Twitter if you want to follow me on Twitter. So bottom line, if you just want to boil Canslim down quickly, it's a three-legged stool. I'm looking for the right stock. So that's fundamentally sound. That's the left side of the chart in market surge. And this is actually weighted. People forget that. They don't talk about this anymore. But in Bill's book, he said this is 2/3 of the weighting. So the fundamentals, the numbers, the back of the baseball card, if you will, that's really what's most important and what I put the most weight on. Then I need that stock at the right time. So that's the right side of the Market Smith chart. That's the technical action. That's what they talk about all day on IBD Live every day. And that's what we stare at the most. But I need the first leg of that stool. And then the third leg of the stool is the right market. So I need the M factor. I need an uptrend. I need the indexes above the 21-day moving average that Mike Webster talks about so much. I need those things because if I try to sit on a two-legged stool, I'm going to get hurt physically. And if I sit on a two-legged investing stool, I'm going to get hurt fiscally. So I'm going to lose money. So I want to be solid on that. And so the meetup groups are there to help you learn that. And the overall goal, I want to be able to apply those principles in a consistent manner. I want to own 8 to 10 of the best stocks in an uptrending market. And I want 5 on my bench or 3 or 4. It's not an exact number that are on my watch list, ready to go in the game when somebody else comes out of the game because they triggered a sell rule. I want to start selling most of these at the 20 to 25% profit goal. And I want to identify the 1 or 2 of every 10 that might be a true market leader. And I can hold and manage it for a longer gain. Here's a great IPO TML chart from Bill. This is Home Depot. Look at that. Goes from $1.70 $230. And of course, it didn't start at $1.70. This is split adjusted. But this is out of the series of, Bill wrote 70 of these articles. They were in the paper. They're actually, the PDF of this is linked in the top Twitter post on my Twitter feed. You can print these out. I printed them out. I have them in a bound notebook. I study them. He teaches us when to buy, when to add. There is so much on to learn from true market leaders on these. So I highly recommend those to you. But that's the goal. This is the one you want to own, and this is the one that you want to sell right when it hits the top or it's near that top. And even if we can just capture 70% of a move like this, we're going to make good money. And if we can learn how to add along the way, which is not new full positions, we're going to make good money. So that's sort of a basic just review of the overall system and how those things can help you. So IPOs, what are the picks and shovels? What are the tools? One of the primary tools for me is Kathy's book. So I don't think I've spoke at an event before with Kathy. They must have called me first because they let me talk about IPOs because she's the IPO queen. And I'm glad she talked about motivating us because that was great. But there's really nothing else that helps you more about learning about IPOs and really the whole life cycle of investing in a growth stock and capturing that big move. So I certainly highly recommend that. Also, TraderLine put together a class that the 4 authors of the book did. I highly recommend that. Really good, lots of charts, lots of good teaching. In the paper each weekend, you get this list. Maybe you overlook it, I don't know, but they give you the IPOs coming up as well as the recent ones. So you can get that. And then also in MarketSmith, there's a built-in IPO 1-year sub list. And then in the paper, you have this chart of IPO leaders. This is the one from last weekend. And some of these stocks, Klaviyo, you're going to see I mentioned later, Kava. So those are the ones that are on there. So that's also a good place to do some homework. Webinars on investors.com. They rolled out the IPO home study course back in September of 2015. So there's a video on that you can watch. And then Arusha has one that he did. I'll have to try to find the link for that and get it to Jonathan. Maybe they can put it in the email that they send out. So taking all those tools and because I don't have much time today, I'm just going to give you the keys. Here's the things that I think are important for the IPO kingdom. First, the M has to be right. IPOs don't work in bad markets. Here's a stock that came out in a bad market. So this was a terrible 66, 70% plunge. And the problem was it just came out in a bad market. This is actually Netflix. Obviously, we know it went on to become a great company, but the IPO stunk because it came out in a market that stunk. So when the market's bad, IPOs aren't going to work. We've been through a long bear market, and really the IPO pipeline hasn't opened back up. Most of it's just still junk, small price stuff, bad underwriters. But there's some, we're going to look at some today that did work, and I'm giving you the keys that I think show us the ones that'll work. Second key, needs to be profitable. Already covered that. I don't try to trade IPOs that are not making money. And actually, if you just look at the profitable ones, that'll knock 2/3 of all the IPOs off your list. You don't even have to spend time on them. Third key, I really want Canslim profitability and sales growth. So that's 25% on each that I'm looking for. And if I can get triple-digit earnings and sales, that's just phenomenal. There won't be many of those, but I know Amy focuses on that and also focuses on the volume that we see on the charts. So fourth key, I need liquidity. So lower liquidity always brings higher volatility. So it comes out of Kathy's book, $20 million per day, average daily dollar volume is what I look for. Might go a little bit lower on an IPO and reduce the position size, but most of the time I'm just better off sticking with 20 million or more. Fifth key, I added an extra C to Canslim. I really like it if I can get some conviction. So this is not just something new, but maybe there's some extra conviction, and I'll give you some examples of that. So, and one thing I also look for, who's managing the company? Is it still led by the founder who started this whole vision? Because I think that can help us. If I see a company going public and the CEO has been there 3 years or left, I know they brought that guy in to take them public. He had some expertise in that. So they were a private company. They wanted to go public. And if the CEO's just been there 2 or 3 years, I'm pretty sure that's why they brought him in. Can I find a hook? So I remember a long time ago, David Ryan talked about Ollie, and he listened to a conference call or the road show maybe. And at that point, they had never closed a store in their 30 or 40-year history, whatever it was. And he just kind of latched onto that like a bulldog. Like, this management company knows what they're doing. They since have closed some stores because they went in some of the old Kmart's, which is a bigger footprint than they normally do. But that's what I'm looking for. I've always remembered his story. So I can do that, particularly if it's a store or a restaurant. I'm going there. Bill used to go to Home Depot on Saturday and count the cars in the parking lot. And so I've done something similar I'm going to tell you about in just a minute. And then what did I get out of the road show? I watched the road show on these IPOs. They're on the internet. Um, what do I think of management? How do they come across? How do they sell the company? That's their opportunity to sell the company to the big money, and I get to sit in on it. So that's really cool. And I can have management that I really, really like, and I do on one of the companies I'm going to talk about today. Other questions, are they raising real money? Not 10 million, not 20 million. I want to see 200 million, 300 million, more than that. That's what I consider a decent sized IPO. Who are the underwriters? How many are they? Is it the known names, JP Morgan, Goldman Sachs, or is it somebody I've never heard of? How many of them are there? Is it priced $10 or higher? Very few IPOs I've ever seen that go on to do well that started under $10. At the last minute, do they up the offering? In other words, do they make it bigger or do they raise the price? Because that means, hey, there was more demand out there when we started taking orders than we thought. So that can be a good sign. It's not required, but it's sort of bonus points. And does the stock not undercut the IPO price? And Kathy talks about that in the book. So let's look at a couple, the two I was going to talk about today, the eat and run ones. So Kava, I don't think anybody's going to dispute, this is the leader in the restaurant space now from a growth stock perspective. And this was sort of under my nose, literally. I didn't have any idea what it was. I didn't know about Kava before they went public, but a couple blocks from my office, they were building one, but it just had the name on the building. They were going in a space that used to be a restaurant. As far as I knew, it was a vape bar. I had no idea what it was really. And I was just doing my weekend routine and I saw, oh, Kava's IPO in this week. And I was like, oh, there's one of those near my office. I didn't know what it was. I didn't know it was a restaurant. I didn't know it was Mediterranean themed. It's interesting. They don't really advertise. They use social media, but I don't think I've ever seen a commercial for them or widespread advertising. So I immediately went the week of the IPO. It had already opened. It had been open a few weeks, I think. So I went and I was impressed. I thought, this is kind of like Chipotle, but it's cleaner. The food's better. The employees are better. And so I just kept studying and then I learned some key points. Really from the roadshow. So it's co-founder led. So the two guys that started this company in 2010, they're still driving the ship. I knew the Chipotle story. Could Kava do this? Is this the Mediterranean Chipotle? Maybe, maybe not. I don't know. But even if they do half of that or a third of that, they're still going to be tremendously successful. Strong underwriters. There's the names. They IPO'd at 22, and then they raised the price. It priced above the range, and they raised $318 million. So decent size IPO. So I go regularly. I downloaded their app. I count customers. I count mobile orders sitting on the shelf. One visit I went, their parking lot was 100% full and every seat was taken inside the restaurant. And I was like, wow, you do not see that very often. And then the other thing I started doing was counting the Chipotle traffic because they're one block from Chipotle. So same traffic pattern, same time of day, same customer base. And the Kava near the Chipotle on Haywood Road in Greenville, South Carolina is just killing Chipotle. Every time I go to Kava, there's at least 15 to 20 people in line. I'll immediately go to Chipotle. I can see it from the road. I can see in the store, but sometimes I even walk in. I'll leave 20 people in line at Kava and there'll be 2 at Chipotle. So it's just a marked difference. And so that's how I built conviction. And I knew the employees, there's a difference between Chick-fil-A and McDonald's. There's a difference between Sam's and Costco. Their employees are the Costco, the Chick-fil-A employees. The roadshow was impressive. I like the leadership. I like the vision. They had a fireside fireside chat recording on their website where they, were meeting with an investment group. They were very tuned in to handling the growth right. They were very focused on the customer in-store experience. They weren't growing for the sake of growing. And they're now in just half the states. I think they're in 25 or 26 states. And then on their website, I saw this. So this was a big hook in addition to going to the store. So the chairman of the board is the guy that founded and grew Panera Bread. And so he knows what not to do. And he can save you a ton of money because Panera, that he went through the whole thing where you had mobile, digital develop, that sort of thing. So I just think that's phenomenal. He's also on the board of Whole Foods. If you go to Whole Foods, you can find Kava hummus in Whole Foods. Imagine that. And then right after that, and again, this happens over a course of months, there was a SEC filing where he had purchased more than 5% of the company. And so he has to disclose that when they get over 5%. So those were sort of the hooks, the conviction builder for me, the store visits. I think the food quality is excellent. I think it's very good. And I think there's a demand for it. And then they built a third one here. We actually had one across town that's been there for a long time, and I just didn't know about it because I don't go on that side of town much. But they always try to open 3 locations in a new city. So they opened another one here in Greenville. It was the third one. And this was their new design. So I went to check it out. So they have a full second kitchen, which they call the digital kitchen. And they just have to handle mobile and online store orders because they're very focused on the customer experience. And the new one also is within a baseball throw of a Chipotle on Woodruff Road. So it's just very interesting here. So they're clearly the leader. Let's just, let me see if I can get out of this and go to the chart. So let's just look at them in market surge. So here they are. And just going back to the meetups for example, something I learned from Lee Tanner, these columns down here, I can customize in market surge. So I have this set up and named where this is what I want to see on every stock. And the first one's ROE. How much debt do they have? Pre-tax margins? What's their 50-day average dollar volume? I already told you that was important. So these first few are the key ones that I want to see. So you can just see on the weekly chart, this has a great earnings line. It had a great run back here. It's come out of that. Oh, wait, I'm sorry, I got the wrong chart. Bad, Greg. Here's the earnings line. Yeah, that looks better. That looks more like Kava. So it's nice that Market Surge has added that for us. This one has just been a great winner. You can just see that in the chart. You can see the accumulation. Look at these big blue bars. Bill taught us to look at that. Daily chart, again, it bases, it comes out of it, it makes progress. So this one's given us a lot of opportunities to get in it. Interestingly, I just put it on my chart. There was a short attack on them on September 30th. They just shook that off. This was based on 2 restaurants in New York that had low sanitary grades. I actually read that 6 months ago. Somebody wrote an article about that, but one of the shorters, the name brand shorters, turned that into a short attack, and Kava just shook it off, just hung right there at the 21-day. And then right here, this was the day the news came out. This was kind of a shakeout day. So Chipotle has a fund of some sort that invested in a startup Mediterranean dining concept, a small restaurant, and they took that as a bad sign. I took it as a good sign. That validated the Mediterranean healthy diet option to me. So I thought that was fantastic. And so you had a shakeout day there, just came back to the 10-day, didn't even hit the 21-day, which is my green line. And, it's just kept going up. Now, Friday wasn't pretty. That's an outside reversal day. We don't like that. But, and we have earnings coming up in 17 days. But that's just a beautiful chart. That's what we're looking for. That's the IPOs that I want to trade. So let's go back over here. Slideshow. So let's talk about OwnCloud, running shoes. So here's straight off their website, founded by a retired, I think he's a triathlete, Kathy, and maybe even one of those maximum triathlete type guys. And I just thought it was so cool. He started, cutting garden shoes in half and taping them to the bottom of these test shoes. And eventually it led to this company. So the IPO, they raised 746 million. There you go. They priced above. They'd already up the range once and they still priced above that. And so here were the underwriters, strong lineup, exactly what we're looking for. The shoes are very distinctive. I mean, I love the way they look. And of course, I ordered a pair as soon as I found out about the company. They're very expensive. I wanted to check them out. They're very comfortable. I see them in a lot of medical offices, and I see somebody wearing them. I would ask about them, particularly back at the IPO. They weren't as well known as they are now. Other conviction notes for me on this one. So Fidelity Contrafund in August of 2022, the prior 4 quarters and up to that quarter, they'd gone from 1 million shares to 1.3 million to 4.2 to 8.28 million shares. So they were just in there building a position. And Jim Ropel talks about that. If you can find a company that Fidelity's starting early and you can follow them in, that can just be a gold mine tidbit. Roger Federer wants his contract. I don't remember if he was Adidas or Nike, but he's hooked up with them. I don't think they're real strong in the tennis shoe market. I haven't seen a lot of them. It's a different looking shoe. It's a court shoe, but I see the On Cloud. I started seeing them at the gym. Started seeing them socially. I see them people wearing pickleball. It's not the right shoe. It doesn't have lateral support. You shouldn't wear a running shoe to do that. Been very pleased with mine. Let's see, medical offices. Yeah, these were some of the places. And shoe stocks can be leaders. I mean, we're familiar with Crocs. We're familiar with Skechers. Again, big run in the past. And of course, Deckers is, I would say, in second place currently. And they had good earnings this week, and that gave On a nice bump. So let's just look at the chart on it real quick. So here's the weekly. Again, nice earnings line, been a little choppy. Stock chart's been a little bit choppy, but it really, if you follow Kathy's principle, it's really just built a long due diligence phase. It had a nice IPO base, could have traded it here, has 3 of those green flags, meaning it went up, 20 or 20, 25%. I can't, it's the 8-week hold rule has gotten triggered 3 times on this stock. So, it's been tradable. It's given you several opportunities. Like Kathy said, even if you don't try this initial IPO base, back here you could have tried it. I think this was a 57% prior uptrend, which is what we like to see before a base. Then you have a base breakout, base, would have been hard to trade in here. And now it's showing up nicely. And then, after Decker's earnings, that bumped it up nicely. So pulled back to the 50-day, which a lot of the leaders do, and is making progress. Not really actionable here. It's not set up as actionable back in here, and it has earnings coming up fairly soon also. So risk management, got to talk about that. If you're going to ride the racehorses, you got to make sure you don't fall off. So you got to be disciplined. These IPOs and younger growth stocks are kind of like Formula race cars, very fast on the edge. You got to do the hard work, and you've got to have an exit plan in place for every one of these. I have a hard stop in place on every single position I own, on every stock I own, period. It's just what I have to do, because the problem for me is I can justify anything. So if it goes down 8%, I'm like, well, it might come back, or goes down 10%. I'll sell it if it gets back to a 7% loss. It just doesn't work. So that's what I have to do. So have to be very careful, and that's what works. It's dangerous out there. Here's one. So I had high conviction in this one. Good story, good IPO, founder led. Gals started selling clothing out of the trunk of their cars outside hospitals. It's high-end, comfortable scrubs. I saw it in the doctor's office. My sister-in-law's a nurse. I asked her about it. Yeah, these young nurses, they're all wearing this, and it's expensive. But the chart, this was FIGS, was just a disaster. And so this one has not been on my radar forever. I may have tried it back in here. I would have got stopped out, and that would have been it. And that's the nice thing about investing in IPOs. If you're wrong, you're going to find out pretty quickly that you're wrong, and then you can wait for them to set up again. But this one never has. So again, my rule is, or what I like to say is, that my conviction, no matter how excited I am, no matter how fired up I am, it always ends where my stop loss order starts, period. No exceptions, no questions asked. And that's just what I have to do. That doesn't mean that's right for you. Some people can sit in front of the computer all day. They can enter their own orders. I can't do it. And I can always buy it back, but I got to get out. I have an exit plan. I've written it down and I have to follow it. So I have stop loss market orders on everything I own, and they move up as time goes on. Um, the best loser wins. So you got to keep those losses small. This is actually the title of a book that I'm reading now. I forgot to put a picture of it in here. It's called Best Loser Wins, and it's about trading and keeping your losses small. I think it was Livermore said this. It's okay to be wrong, but it's not okay to stay wrong. So a couple bonus stocks that I was going to mention to you. These are also IPOs, young companies. I think some of these were on John's list, of course, because he's also looking at the leader. So Astera Labs, this company is in AI connectivity. I've been watching it since the IPO. I've been waiting for it to set up, and it let me get in recently. On this one of the hooks for me was that when I watched the roadshow, the NVIDIA CEO was in the A-Lab roadshow talking about how good their product was. So they kind of reduced the bottleneck in everything that has to flow through the AI channel. So to me, I'm thinking, hey, this is kind of like Cisco, the router back when the internet just started. Maybe this is comparable. So I've been watching this one, and again, finally, I've had an opportunity, and we'll look at the chart in a minute to get back in it recently. Klaviyo, KVYO, we'll look at the chart of that. And then ARM Holdings, ARM raised over $4 billion. I mean, that gets my attention when most good IPOs are, 300 to 500, you raise 4 billion, not 4 billion market cap. You convince people to pony up that money. And this one was a re-IPO. They're also an IPO. They have 99% market share in smartphones, their technology, and they have in the roadshow, they said something like 70% of the world's population uses devices with their technology or their licensed technology in it. So that was a good hook. So let's hop out. Let's just pull up those charts real quick in market surge. So here's Astera Labs. This one to me on the weekly chart, I was looking at this as maybe setting up a high tight flag. You had about a 95% flagpole, but you need a 3-week flag. It couldn't even make it 2 weeks. So this also could be a cup with handle. You could view it that way. The best entry was down here, but it also has set up here, now broken out of that. In fact, it just got the little ants indicator on Friday. And then ARM, again, I think this one's interesting. It's broken down. It broke down this week. They just got in a big dispute with Qualcomm. I think it was one of their licensees. So they need to get that straightened out. If I wasn't in it, I'd kind of like, pulling back to the 50-day. But I'd been getting in it, and then I mostly got stopped out. And then Klaviyo, this one, not actionable. It's actually hitting the 20% profit goal, and I sold my add-on buy there. But it's one that's been strong. Also, it's wedging a little bit. It's going up on declining volume, but still pretty strong. So I think those are ones to keep an eye on. Let me go back to this and make sure I'm about finished. I'm about on time. So, and ARM. So this was another thing. So there's actually a book about this stock and this company. It's called The Everything Blueprint. So I read this. Microchip design that changed the world. Is pretty recent. This is a phenomenal book for me because not only is it the story of ARM Holdings, which didn't start till about 1990, this actually goes back to the beginning of the entire semiconductor industry in 1959 to 1961-ish. So before that, everything was vacuum tubes run before we went to semiconductors, which really microchips a better word because these are very complex devices. But this goes back and talks about how all the big players in the field started, how Intel started. Really fascinating. So it's very educational if you want to know something about the semiconductor space. And I think we do want to know something about the semiconductor space. So it's very insightful. So Amazon has it, fairly new book, maybe only hardback, but and it's long, it's 400 or 500 pages, but good book. So we looked at the charts. So that's it. The next meeting I have at our Meetup group is November 7th, 2024. That's a Thursday. So I pushed it till Thursday that week because the election is that Tuesday and the next Fed meeting is that Thursday. So the Fed meeting got bumped a day because of the election. So that'll give us plenty to talk about. You can go to meetup.com and search for the Stockyard. That's where I do the online meetings. They're recorded. Everybody gets a slide deck. they're $15 a meeting if you want to go to those. So here's what it looks like on the Stockyard page. Is November 7th at 7 p.m. And if you want to follow me, here's emails, Twitter handle. I need y'all to follow me on Twitter. I never asked for Twitter followers, but I'm like 50 away from 10,000. And my adult kids, they don't follow Twitter or anything. So the next time we have a family meal, I can just casually mention that I passed 10,000 followers on Twitter. And if I time it right, I'll get 2 or 3 of them to spew iced tea out their noses while they grab for their phones to see if that's really true or not. So join both those meetup groups you can join. I have a YouTube page. I have some videos on there. There's a 45-minute introduction to Canslim, which is what I was doing at the beginning of each monthly meeting. And I thought, hey, we're just going to standardize that. And that way our meetings, I run them as more advanced meetings. We get right into the educational materials and think you have some experience, or watch the video to make sure that you have it. So that's it. Amy, did I have any questions or anything you need me to answer?
Oh, yes, we've got lots of questions for you here, Greg. By the way, again, just another great presentation. The speakers are fabulous. Greg, by the way, you told me about kava. You told me how delicious it was. And that's the beauty of the meetups, is to share information, because Greg is like, Amy, you got to try this. I'm telling you. And so I learned about kava from you. So thank you. That was great.
Good.
Be sure to follow Greg on Twitter. That's where he has the link to Bill's articles, with the PDFs are attached in there. I have a question here, Greg. What is an IPO roadshow?
Oh, so the roadshow, there's one on any IPO of size. So you can go, the primary site is retailroadshows.net or .com. And so what they do, it's called a roadshow because they used to travel around. When a company was trying to go public and sell its stock, they would go meet with all these big institutional investing groups to try to raise money. Well, of course, now they're all online. So I would never have access to that. So they're usually 30 minutes long, and it's management presenting you their company. And so it's their best opportunity to sell me on the company. Now, as soon as a company goes public, they go away. So you have to watch them in advance or record them. They tell you not to record them, but I'm like, they're on the internet. I don't see why you can't record them for your personal use. Not going to say whether I do that or not. But so that's what the roadshow is. So if you'll go to the main, again, it's retailroadshow.net, I believe, and it will list them on there. And they're 30-minute presentations by management. And you'll see some bad ones too. But most of them are professionally done now. I mean, the ones for OwnCloud are like watching a little movie on the company. And you usually hear from the CEO and the CFO. And Kava is a company where I love the management. Not just, I've never heard the chairman of the board speak, but their president and their CFO, they are jam up. I mean, you can listen to the conference calls, and she's on top of things and sells the company. And they're always, it seems to me the analysts are always pushing them to go faster. And they're like, no, like the last presentation they did, they got into catering, or a discussion of catering. And are they going to do that? And they're like, well, we can't hurt our customer experience in the restaurant because we got these big catering orders. So do we need to have a catering center that does all that in a particular location? So they're very cautious. It would scare me if they go too fast. I think they hurt their business if they do that. So I love the management at Kava. Every time I listen to them, I learn something. I just think they're on top of it. So,
Greg, if you get stopped out of and a stock turns around, how often will you buy it back?
well, hopefully 100% of the time. But like Kathy said, sometimes we don't follow our rules, and it depends on the market. It depends on everything. But if I get stopped out, I normally need it to set up another proper entry again. So it's not buying it back immediately. I mean, if you get shaken out, if there's a 1-day shakeout, and that's so hard to master those. But on the other ones, if I get knocked out of something, like I probably traded A Lab early on, and now have had to wait till recently till it's finally set back up and given me an early legitimate entry per my rules. But I think anything we sell, if we did our weekend routine, if it got on our watch list, on our top tier watch list, because I tier mine, it should have been a strong Canslim stock. So if I get kicked out of that, I don't want to throw it in the gutter. It can set up again. and if you look at those articles by Bill, look at how many times he's adding in the areas where he's adding. And of course, Lee Tanner has a great, I mean, everybody that's speaking today they haven't been a personal mentor to me, but they've been an online mentor to me. John's fantastic on market history, market direction. Kathy on IPOs. Amy's helped me get the meetup going. And of course, Lee, everything Canslim. I spent a ton of time watching his Petaluma IBD meetup videos that are out there to actually really start defining myself and being able to grasp the system. So all
Okay,
that's
and
taught.
I agree with you, Greg. It's all such fabulous stuff. You want to bring up your market surge chart. Where did you buy Kava?
Okay, let's go back to market search
And by the way,
and
while he's pulling
Kava.
this up, I'm going to show all how you can join all the speakers groups, including several others. So get your phones ready. Make sure you can join all their meetups and their Twitters and all that kind of stuff.
Yeah, so these blue areas, I kind of started here. It was set up. I probably used this sloping trend line. So these were various buys. Um, I made an ion probably an add-on buy here. I'd have to look at my rules and my trading spreadsheet because I try to put notes in there on why I buy. But I mean, I've owned Kava on and off, so I owned it. I don't have it marked on the weekly chart, but I owned it some back in here. May have got stopped out there. I probably owned it some here. Would have got knocked out. That's a pretty deep retraction. And then and back in it now. I think I have a full, it's in our group teaching portfolio. Yeah, I have 125% size position. So
So
have an
Greg,
oversized.
how are you going to handle that going into earnings?
I use a cushion rule like they
Okay.
teach on IBD Live and everybody else. So my rule, I know Arnie uses 10%. I require an 8% cushion in order to hold a full position through earnings. And that's hard to do sometimes, but when I have the cushion, I just have to grit my teeth and bear it because that's my rule. So,
Okay.
and again, if I don't have that big cushion, I can just sell part of it if it's a stock I really like, but most of the time I'm going to be out. I had to sell something this week. I didn't have the cushion and it's come back. Is it VRT? Um, Look at a daily chart. Yeah, I had this one. I had bought it here. I had to sell it all right before earnings. So that's what I did. And so I made, I don't know. I mean, I kind of bought it late. It wasn't too far from earnings. So I think I made 5.5%. That's okay. That's not terrible. That happens. And then it had a really bad earnings day. So I haven't had enough conviction to get back in. And it's still a little bit extended. I don't like to buy stocks extended. I rarely buy stuff past this 5% buy zone. I really like early entries. I'd like to be in early, but one of my flaws was buying extended stock. So doing my post analysis, that's something I do not do any longer.
And Greg, if you can bring up ON. Well, first of all, people were asking, what are the green dots on your charts? So what?
Come to my meetup. So the green dots. So Bill, that goes back to what I said at the beginning, how I want really strong profitability. So my dot system, it started with Bill O'Neill in two old interviews in the Market Smith webinar. Scott O'Neill was kind of pressing him, and this is just ingrained in my mind, was pressing him on what's the secret? Like, is there one secret? Is there one key thing? And Bill finally got frustrated with Scott because there's not one key thing in Canslim, but he said, I'll say this. If a stock doesn't have 40% or more earnings in the last quarter, it doesn't have the ability to be a true market leader at that time. And that's always stuck in my mind. So my green dots, two green dots means that in that earnings report, that stock had at least 25% sales increase, Canslim, and 40% in earnings. And then if it had triple digit earnings, it gets three green dots. So that 248% is why it has three green dots. If it has triple digit earnings and sales, which I know Amy Smith loves, it gets four green dots. So that just helps me in my weekend routine to say, hey, don't overlook this stock. This is a good Canslim stock potentially. And so that's what my dot system is. 2 green dots, it meets what Bill said. 3 green dots, it had triple digit earnings, and 4 green dots, it had triple digit earnings and sales in that quarter. So it's just a personal tool I developed to help me. And if you have a stock, what's one if I have one that's losing money, I'll just make it one big red circle oval and kind of do it all the way across the chart, because those will pop up in my weekend routine. And I just have to go, that's losing money. I just really need to stay away, especially now. I have too many good stocks to look at. So
Okay.
that's what it
If you
is.
can go to the weekly chart of this stock,
Yeah.
and you see how somewhat erratic that earnings per share plot line is?
Yep.
Does any of that bother you, Greg?
Well, of course, we haven't had that for a long time. That's a fairly new feature in market surge,
Right.
within the last year. So it wasn't there to bother me. I do like the ones on Kava better, but I mean, if I was properly positioned in it, I would be noticing it. And some of it, I would even go, hey, this basing period, we had a little slowdown in earnings. Then earnings started picking back up and it started moving back up. And then, they match up. I do know there's a lot of Canslim teaching that, hey, eventually the stock price is going to follow the earnings line. I mean, the one that has baffled me, here's the best example, is ALAB. Look at that earnings line. I mean, oh my goodness, you just don't see that. And it's like, why did this happen? But that's why this one stayed on my radar, because of the earnings line. But I don't focus on that the way you asked the question, but I do pay attention to it in my weekend routine and deciding. I mean, I do a first pass watch list that probably has 30 to 40 stocks on it each weekend. But
Mm-hmm.
then my top tier watch list will only be 5 or 6. And so that's the kind of stuff I look at in sorting the opportunities I'm looking at to go on my watch list, is how I would say it.
Okay, and here's a question, and everyone's saying thank you, thank you, thank you to all three of the
Oh,
speakers.
thank you.
Greg, you stated you sold off your add-on position at 25%. Do you always do that? And if so, why? Why not hold or only sell a portion and hold some of the add-on?
Well, sometimes the ducks are quacking. I mean, we have losses in the system. So what was that? Wasn't that on KVYO? Yeah. So earnings are coming in 11 days. So I'm paying attention to that. And so this had some cushion on it, but this is that add-on buy right there that got sold. So let's say I pushed it to 111% position size. So that was 11% additional. And I mean, Bill teaches, it's good to start selling some at that 20 to 25% profit goal. And this was an ad. I got earnings coming up. I would like to hold this one through earnings. I have a strong cushion on these buys. I'm in a perfect condition to hold it. I have conviction in the stock, but I had decided I'd changed my orders. I'd put in an order, you can do a conditional order. I want to sell that add-on if it hits the 20% profit goal, or if it goes down 7% from what I paid for it. So I just had that order sitting there. And I'm going to talk about having that stop loss order on everything at our next meetup, because we did go through the hurricane, like you said. We were without power and internet for 7 days. And you think, oh, I can trade on my phone. Well, no, you can't. When your whole city is almost out of internet and everybody's using your phone, the internet doesn't work anymore. All we had was phone and text. We didn't lose that, but I couldn't access anything on my phone. You couldn't go to the library. I mean, 90% of our city was without power. And we
Wow.
weren't hurt as bad. I mean, Asheville and the small towns in North Carolina got hit, but we're an hour south of Asheville, so we didn't have the flooding, but we had the full storm, and,
Right.
and it was a mess. And I have a daughter and son-in-law in town with 3 kids, 5 and under. They have trees, power lines in their yard. They can't even get out of their driveway. So I'm not real concerned about trading. And because I had those stop loss orders in effect, I had a peace of mind. I didn't have to worry about it. I
Mm-hmm.
knew that if anything went bad in the market, I was protected. I wasn't going to get killed. I could go focus on my family.
Well, that's great. Greg, thank you. That was inspirational, as all three of these have been. They've been excellent information. Appreciate it. And thank you so much for coming. And I'm glad you guys had the worst of the storm, that you were able to get out of it. And I think now we're going to take a quick 15-minute break, folks. So be back here at 11 o'clock. And then you will get me, and I will talk more about the meetups and go get a drink of water. We'll see you in 15 minutes.
Well,
It's 11 o'clock. We're back if you're ready.
I'm ready. Here we go.
Go ahead and share your screen. You're off.
All right. I don't know if you were going to do something here, Jonathan, or not. I don't think I need to be introduced. I think most of you guys know me. I'm so happy to be here. Okay, everybody get your cameras ready. For those of you, if there's somebody here that doesn't know me, my name is Amy Smith. I had the great privilege of working closely with William O'Neill, and part of that was to open up these great meetup groups. So take a picture. They are literally all over the country. We have people tuning in right now from the UK and from Australia, believe it or not. I think it's like 3 o'clock in the morning their time. So take a picture of these groups, but I have more to share here. First of all, thanks to the speakers today for volunteering your time on a Saturday, including Jonathan. He's got 2 little kids at home. So he's, Saturday is a time when he likes to spend with them. Thanks for these presentations, sharing your knowledge, helping other people. These people are amazing meetup leaders. They've been doing it for years, and they're all volunteers. So thank you, thank you, thank you so much. So go ahead, time to get out the cameras here. I'm going to try to go through these quickly, but there's so many groups doing so many amazing things. I have to kind of call them out. Ajit Desai, he has Molly's group. There's a whole bunch of subgroups in there and weekend reports that he sends out. I mean, everything from IPOs to, they talk about any number of things. So be sure to join that. Greg Morton, you just heard, he does a daily market diagnosis. It's like a little paragraph, and you can view that on the Heather Grehan's Skype group, and you can just join it. You can send her an email at zazencapital@gmail.com. Kathy has told me that they operate these almost like an in-person thing in Denver. So if you're in Denver, you can look her up, but they don't really do a lot of the online Zoom work. Options in the overall market. Ken Chin is so sweet. He answers email questions on a group thread, and he answers phone calls too, if you have a need. So he's very generous with his time like that. And Dennis Wilburn, I did his podcast. He's got YouTubes and podcasts. He's out of Honolulu, used to be in Northern California. And he's got a lot of work out there. So you join his group. And also Mike Lamont also helped out with the podcast, and he's also great. For the ETFs, those of you that are interested in the TQQs and the SOXL, Floyd Dameron is the one that's done just amazing work. And Gary Taylor, many recognize that name from the Arizona. He was a meetup leader. They've back tested. So if you're interested in that, join that group. That's in Alaska. Mike Scott and Lee Tanner have a focus watch list each week. If you want to get on that list, contact Lee Tanner, Northern California. Regular meetups, Alex Marenko and Steve Sweats do a terrific job. This is the Pasadena Santa Monica combined meetup. And sometimes Jason Thompson from the Ticker Money joins them there. And then we have Roy and Wes Maddox, and they're out of Charlotte, North Carolina, doing good work each month. Then we have Anil, and Anil has all kinds of, I can't even tell you how much educational work he has. He's a professor. So there's too much to list here, but join his Delaware IBD meetup group and also email him if you just you need education. He's really, really, really terrific with that. John Pocaraba, you heard earlier, this is the Boston IBD meetup, sign up for that. Hans has a San Francisco group, and he also has a free newsletter that he sends out, so you can join that. Michael Miller is out of the New Jersey IBD meetup. They meet every Sunday and also once a month on Wednesdays. You need to email him to get added to the list. And Monica Steinborn is wonderful. She helps out also. Then we have Les Holt from the Tri-Valley meetup. They meet the last Saturday of the month. And Sharon Donovan and Marjorie Nelson contribute there. Ashish Dave now he works for Apple, and he has a non-disclosure agreement. He can't hold live meetups, but he does send out a monthly a newsletter. He has charts on it, and he answers questions. If you email him a question, he'll answer it. Lee Tanner has done so many lessons and videos on any topic that you can imagine in Canslim. It's an unbelievable library. Email Lee to get that and find out how to access it. And I know there's a lot of other groups around the country. If I have missed anyone, please forgive me. Send me an email at amy.smith if I overlooked you, and we'll be sure to get you added to some of these slides. Okay, the review of 2024 winners. I'm going to look at some big liquid names, and not all of them were easy to handle. But the reason to be any of them was they were all using technology to change the way we live. They are game changers. So we have NVIDIA, Super Microcomputer, MicroStrategy, Palantir, Shark Ninja, and AppLovin. I don't think I need to say too much about NVIDIA. I mean, obviously, it's in everything. This AI, computing, healthcare, transportation, manufacturing is only going to get bigger. And I was kind of having like a futurist discussion with a friend of mine, thinking about where we are going with this. And it's phenomenal. And around my neighborhood, you can hop in. Now, I realize we've got Uber and we've got all, the ride sharing, but you can get into a Waymo with no driver and it will take you places just like a taxi. And I'm seeing it all over the place in my neighborhood. So it's that the world is changing pretty quickly. So this is classic. I know everyone has studied it. I just want to call attention to the fact that this is what a model stock looks like. We have a cup here. We're in 2022. And the stock comes up and has 3 weeks tight, comes up and has like a 5 weeks tight, has another 3 weeks tight, another 4 weeks tight, and then it builds a base on base. We have a double bottom and a flat base. And so you have had this phenomenal run, but now let's go to, I said I was going to mention 2024 winners. Well, here we go. So we're up 11 weeks in a row, and most of the closes are in the top of the range here. Not all, but a lot of them are. Then we form kind of a tight flat base here, and then we have this wider and looser later stage base. So I wanted to show you dollar volume, and Greg did a good job. You can pull this up in Market Surge. I wanted to show the visual aspect of what does that mean. So this is NVIDIA. We're on a weekly chart here. Right here, you draw a line. This is your average volume over right in the weekly chart. So maybe you're at like $150 billion. Well, now look at what happens as we're in the beginning. I say 2024. Look at the billions of dollars that's going in. This was the beginning of the 2024 move. And if you only look at dollar volume, you can allow that to lead you in trading and finding the biggest stocks, the biggest winners out there. So this is a Market Surge chart. If you guys are not using it, I cannot recommend this enough. I could not operate without it. So what's the reason for the move? Well, Greg mentioned that I like these triple digit numbers, and that's an understatement. This gets my attention. Now, this they thought was a good report, right? 152%. But, after this phenomenal growth, it sold off a little bit on this report, but it has recovered. So here's our beginning of our move, nice and tight, forms this base pattern here. It's correcting, the market was pulling back, so was the base. So was the stock. Takes off again. Now, two things that can help you in this. I'm going to really focus on the earnings plot line and on your relative strength line. This can lead you in and out of a position if you're having trouble with it. Some people say, where's my sell rules? Well, of course, you're trending above the 10-day here and the 20-day. You can use the 8x10. You can use the 10x21, but it's kind of similar. Anyhow, it starts to sell off, and of course, you do break the 50 here, but your relative strength line is showing you right ahead of this that it's not acting right. So that's one thing that I would look at. And some of the wider, looser action here obviously has been, the market volatility that we had. But NVIDIA is so heavily weighted, that does affect the market volatility. Now, everyone says NVIDIA's going up now, it's going up. It's so exciting. And yes, it has gone up in price, which is ultimately very important. However, it has a D- in accumulation distribution rating. This is a wider, looser pattern here than what we've had in the beginning. And we have a lot of pink sell-off, see here, but we don't have a lot of blue accumulation. Now, it doesn't mean that this won't work. Part of the problem is that, practically every fund that's alive has a position in NVIDIA. So there's, kind of a drying up of the volume. But will they add to this big position after earnings November 14th? So that'll be the big question. Yes, it has gone up in price, but I want to see some more volume in there. Super microcomputer. And obviously, we've got solutions here in cloud computing. And again, we've got another AI name. And this one was one, Greg didn't touch on this one, but, the earnings plot line, okay, we're going up. And now what happens when your earnings flattens out? And this is a beautiful thing that we have now in Market Surge. It builds a little base. but it's not going up in price. What happens when your earnings starts to go up again? Well, the stock goes up. Now, this is an interesting one to study because this is what I call, in the level 4, I called it the fast and furious. This is how does a stock trade, and how can we use this? So it's up 10 weeks in a row. So now you got the 8-week hold roll, because in this one week right here, this was up 24% this very first week. So if your stock gains 20% within the first 3 weeks of a breakout, you have to hold it for 8 weeks. That's a rule in how to make money in stocks. So let's count them together. 1, 2, 3, 4, 5, 6, 7, 8 is your decision right up here. Now you have to really decide what you're going to do with it. This is when Bill says you need to take a look at it. You need to decide. Well, what happens to your relative strength line? Your relative strength line was just screaming into new high ground here. It immediately loses it right here. Let that be your gauge, more than the earnings plot line, because the earnings still look like they're going up, but your relative strength line begins to sag. And another thing that David Ryan had mentioned to us in a webinar is, okay, ultimately this stock runs up 241% from the pivot up to here. But what happens before that is we get ants going on. So what are the ants? The ants is the stock has to be up 12 of 15 consecutive days. At the end of that period, volume has to be up 20% or more from the beginning of the move, and the stock has to have advanced 20% or more from the beginning of that period. So we have a stock, and Greg showed a stock, I think it was, what was it, A-Lab, that had the ants. Now, if it's forming early in the move, that's a good thing. If it's forming after the stock's already gone up over 100% here, this could be a sign of danger and warning. I noted too, is when I was listening to him talk about that the relative strength line right here is sagging tremendously. So here's a look at the daily chart. We have this run up right here, and it craters right here. This is when you don't freeze. This is when you say, you know what, I've got my sell rules in place. It's not acting right. We have an increase in volume. I haven't broken any moving average yet. Here's my, your 8 by 10 right here, or 10 by 21. It hasn't broken it, but this is not acting the way it should. It had this massive run up, and you really need to take heed of that. The relative strength line immediately starts to sag. Okay, let's go to MicroStrategy. This is facilitates data-driven decision making. We've got analytics for healthcare and the life sciences. I really don't like this chart. I did not trade this stock. I did put it up because it had a 280% move, so it is a big winner for the year. So let's just say why I don't like it. Oh, the earnings plot line here is going down. It's erratic. Look at this trading. And look at how wide, loose, weak it's going down. And the relative strength line is bad. The earnings are terrible. But now starts to straighten up a little bit better. We've got some base building here that looks half decent. And then we got the beginning of the move, starts right in here. As I say, this was not a stock that I wanted to trade or even thought about trading. But for the sake of argument, your relative strength line is moving higher here. And for a while, what happens to your earnings? The reason your earnings were going up, but that didn't last very long. You see, when your earnings start to fade again, your earnings plot line will tell you, it's going to tell you what's going on. So here's the fast and furious move, but this is a stock I wouldn't trade. Look at this. Quarterly earnings, negative 800%. Now we have a good one. We have another terrible quarter, another one. But let's just say you tried it. Okay, you're buying here, you've got an earnings report, and you did get some volume right here. But look at the daily trading here. I mean, it's up and down and just wide and ugly, and I just don't like the looks of it. But if you were in it, you need to say that you know your stock's personality. This is a crazy, wild buck and bronco. If it starts to pull in on you, you need to have your rules in place and look at your relative strength line. Obviously, the stock is just rolling over, so you want to make sure that you don't stay in these. Palantir. Okay, we're back to AI again. And this one, Charles Harris talked to a bunch of us, and he said this publicly. He might have even put it on his Twitter, that he traded in and out of this. This is not a recommendation. It doesn't mean that Charles is in it right now, but it points out that not all the big winners in 2024 were easy. So how did he handle it? He traded in and out of it. So let's take a look at that. You have your earnings report here. Stock takes off. It's sort of, okay, yeah, it's coming here now. It's coming in on you. If you're holding, you're back to what you paid for it, just about. And then it meanders around for a lot longer. And there were other stocks that were working better during this time period. So are you spending time in a stock that's not bringing you in any money? Now you have this pullback to the 200-day, but it starts to get support. Look at the close on the top of the range here because we have another earnings report. From there, the stock comes over, has a regular pullback to the 50-day, which you would expect, and then runs higher again. So, just to say, not all these are just easy buy and hold, but this one is one that I really, really liked. And I wasn't sure if Greg was going to talk about it in the IPOs. Shark Ninja. Now, what's new at Shark Ninja? Well, this was a great stock. This was an IPO. Look at your earnings plot line. Greg showed this on Kava. This is a stock that is, look at the quarterly numbers. Look at these strong quarterly numbers. And look at the volume that was going into this. Also, here's another thing. Look at how many blue weeks we have versus pink weeks. Would we call this tight trading? This is beautiful. It's not erratic. It builds bases. It's orderly. It's, the RS line is screaming into new high ground. So this is the weekly chart. And now let's see how beautiful this is on the daily chart. I like tight, orderly trading, forms a nice little flat base, comes out, breaks out, has a gap up on earnings, and is holding above the 10 and 20-day right here. Now, this stock did it really well on earnings. Why? Always go and look at the reason why. They slayed their second quarter estimates and they raised the full year outlook. Okay, so they raised their outlook. It's easy to understand what the company does. I mean, I have to be honest with you, I kind of want to buy all these products, all these little, this is just, it's easy to understand. If you've gotten a little exhausted in the AI space, Shark Ninja is easy, it's easy to understand. Okay, AppLovin. It helps businesses connect with their customers through AI solutions. It's software, help with mobile advertising, marketing, and analytics. This was another IPO, and as Greg told us, just because a stock has an IPO, look at this. You get this tremendous pullback. So wait until they really are acting properly before you get into it. Now we bottom out down here. We have a pretty negative earnings report. But here we start to move. Look at the numbers now. The numbers will tell the story. Your earnings plot line tells the story. Stock moves up and it forms a couple bases here. Another base, a little bit of a wider base, but took off again because we had this earnings report. And your relative strength line did go up and down as the stock was basing, but we also had a market that was correcting. Anytime the market pulls back, usually your stock is going to form a base. If it's a good stock, it's not going to sell off tremendously. It should form another base. And here it is, and let that relative strength be your guide. This is just great. This is a daily chart, AppLovin, gap up on earnings, triple digit numbers. You know that Amy loves these. I really look for these. Gap up on earnings here, forms these nice orderly bases. This is a little bit more of a correction, not too bad. Again, we come out with earnings and we take off again. So we're getting into earnings for all these stocks. So take a look at them, follow them, see how they're doing. How do we find these names? I keep it really simple. You can go build all kinds of things in Market Surge. It's a great tool, fantastic. You can do anything. You can turn it upside down on its head. It does a lot of things. I'm just going to run up on volume. I'm going to keep it very easy. I'm going to do this as part of my daily routine. And if I do that, I'm never going to miss a stock. I'm not going to miss them because you can click on your earnings button. What's coming up with earnings? Be aware of what's coming up. Did I miss anything that reported? Can I find a way to get into something if I missed it? What is the earnings gap up every day? Every day, go take a look at this. And for those of you that maybe play your options, what's gapping down? Okay, earnings due that we have next week. It's going to be exciting. Here we go. We have Advanced Micro Devices, Alphabet, Microsoft, GoDaddy. We have Meta, MicroStrategy, Apple, Amazon, and Shark Ninja. It's a really big week. So want to add to these positions or add a new position, just have your plan ready. Get ready to see how you're going to handle these. And upcoming in coming weeks, we've got a bunch of big ones: Palantir, Kava, AppLoving, and Clear Secure. This is another one that has done pretty well. I put this in here. This one does not have the earnings the way we'd like to. I am seeing institutional buying in it. It's because of the name. This is Instacart. It's called Maple Bear, but the ticker symbol here is CART. This is not a recommendation for you to buy it. I'm looking to see if they can turn around these numbers. If they can get some better earnings going, of course, it's a name that's a lot of institutions would know and look at this name. And I wish you happy hunting. If you guys need to contact me, it's always amy.smith@investors.com. And I'm happy to take any questions you might have. Jonathan, are you managing the Q&A?
I am. You're looking for questions for yourself? Mostly just great.
Oh, well, that's very sweet. That's very nice.
You need to be happy.
I would say, be sure that you, earnings season to me is the time when it's easy. Now the people buy, Lee Tanner's coming up and has many alternative, wonderful buy points. And I think you absolutely should pay attention to that too. If you're going to buy real basic, an easy way to do it is we've got earnings. Somebody reports good earnings. You get a gap up. You get huge institutional volume. And, you can see exactly what's happening because, as Bill says, the chart doesn't lie. So earnings season, absolutely, it's just an easy way to get in. Now, as we get more advanced and there's more confidence in your trading, there's many different ways to trade on a pullback or things like that. But definitely, I hope everyone got pictures of the different meetup groups that we have going on. You're doing fabulous work. And again, I just want to say thank you so much to our speakers. Super job. And I guess, Jonathan, I'm a little early, but it never hurts to be on time. We could bring up Mr. Lee Tanner.
You are a host now, Mr. Tanner. You can turn your camera on. You're off to the races.
Okay, I'm not going to use my camera because if I do, I risk a computer crash.
Well, Lee, let me introduce you, although you really don't need too much of an introduction. I think everyone knows you, but Lee's really looked up to by many of us. So has a chemical engineering degree from Purdue University. He's a nuclear submarine officer. He's worked in the defense industry. He's been studying and applying Canslim investing since 1986. He's attended all the IBD workshops when we had them live, including the Level 4 Advanced Workshop multiple times. He's the co-organizer of the Petaluma IBD Meetup. And really, he's considered the most authentic living Bill O'Neill disciple, and he follows Canslim to a T. He knows the book, How to Make Money in Stocks, like the back of his hand. Lee has mentored and helped hundreds of investors over the year, and that is really true, if not thousands, Lee. So Lee's going to discuss early entry points for recent breakouts. And Lee, it's all yours.
Thank you, Amy. It's a pleasure to be here with you and the third National Virtual IBD Meetup. And thank all the presenters. The presentations have been terrific. Got hard acts to follow here. So I'm going to talk about early buy points of recent breakouts. I like early buy points a lot because they improve my risk to reward ratio or my reward to risk ratio. And they give me more opportunities to get into top stocks in case I miss one. And those are the reasons I like early buy points. And almost all the early buy points I use are taught by William O'Neill and IBD. I don't make up my own very much. There's a couple in here that weren't taught by IBD and William O'Neill. This presentation is for educational purposes only. I'm not recommending any stocks or securities to buy or sell. All investing has substantial risk of big losses. And Canslim is the registered trademark of Investors Business Daily. We'll have time at the end for questions and answers, but if you don't get your questions answered or you come up with some later, you can email me. Amy also mentioned the focus watch list that Mike Scott and I do each week. We have some customized ways that we screen stocks and pick out some that are interesting to us. And we send that out, but you must be a current subscriber to Market Surge in order to get that, because the data we take to do that comes from Market Surge. And with the fair use doctrine, we can share that, but only if you're a Market Surge subscriber. So if you are and you'd like to get that list, you can email me. I also, the Petaluma IBD Meetup website has files that are saved on there. I have a hosting website that has prior Meetup website files, presentations that Amy mentioned. You can join that Meetup, and then you'll get the link to the files hosting website. I use the William O'Neill Canslim investing system. Greg talked about trading personality, having your trading personality. He's right on about that. You really need to know what you want to do. There's a million different ways to invest. This is my trading personality. I'm Canslim based, but not so much the market factor. I'll make buys in almost any market condition, and my sell rules will protect me if I'm wrong. But I don't want to be sitting on the sideline when the market's running up. I want sound bases near a pivot point. I'm going to use the William O'Neill revised profit and loss plan, which is in his book. I'm a position investor. Most of the stocks I buy, I'm going to own 8 to 18 weeks. Few exceptions am I going to own longer. I haven't had a long-term capital gains stock in a long time. I'm sort of the opposite of Kathy on that score. And I'm totally rule-based. If I'm going to reach for my mouse to click an order in, I first ask myself, what rule am I using, particularly if I'm selling? Totally rule-based. That helps me with the emotional aspect of it. I use rules to manage my emotions or not to be bothered. So the William O'Neill Canslim investing system picks stocks with the Canslim properties that have sound bases that are almost completed, that have a prior uptrend of at least 30%. Most have more than that. And they're near a pivot point. Then I'm going to buy them about the pivot point. And according to Bill O'Neill's revised profit and loss plan, I'm going to hold them until they go up 20 to 25%. And I use 25%, and then I'm going to sell them and take profits. With very few exceptions, I'm going to sell them when they're still going up, and I can sell them and take profits. If they go down 7 or 8% from my buy point, I'm going to sell them. And the profit goal is from the standard pivot point of the base, because that's what the market knows. The market doesn't know where I bought the stock. My sell is from the place where I bought the stock because I'm protecting my capital. This slide shows the reference in Bill O'Neill's book for those things. Now, by buying early, by looking for sound early buy points, I'm going to improve my chart reading skills, and I'm going to look for an opportunity to buy a little bit before the pivot point. And by doing that, I can get a little bit more gain. My standard profit-taking goal is from the pivot point. If I could buy 4 or 5% lower, I'll have a bigger gain. Sometimes also by reading the chart carefully, if I buy early, I can find a place on the chart that'll tell me if the stock goes down, the trade didn't work. I don't need to let it go down 7% before I sell it. So my capital loss risk can be lower by a little early buy point. The early buy points I use are described here. I'm not going to go over all these right now because I don't have time, but I have presentations on all these. You don't even need to join the Petaluma Meetup website to get these. Just these links are here. Presentations on all these early buy points. Also, the IBD online courses discuss most of these early buy points, and so you can get them there as well. Some recent early buy opportunities. Amy talked about NVIDIA. Everybody knows NVIDIA. It's very visible stock. This is the base Amy talked about a few minutes ago. And this is the most recent base. Now, the early buy point that I'm going to use here, I call the power of three. And it's when three moving averages converge and the price converges with those three moving averages. This is Mike Scott came up with this, and it's a form of pennant. It's a way to identify a pennant formation, or some people call it a coil. And most of the time when this occurs, it's a low volatility thing. The price will either break up or down. So in this case, it's the 50-day moving average is the red line. The green line is the 21-day exponential moving average. And I use that because that's what's used in the market school model. And then the purple line, or the fuchsia line, is the 10-day moving average. So when the 50, the 21-day exponential, and the 10-day converge and the price converges, that's a power of three. You can also have a setting where the 200-day moving average line converges. That'll happen when the market's correcting. Sometimes you'll even get a power of four, where all four of these lines will converge with the price. So the power of three is the three lines, and then you have to have the price. This occurred here on the 22nd, the 23rd, and the morning of the 24th on NVIDIA. This is a buying opportunity. Now, if you didn't buy it, if you bought it here, the price moved up and you're a happy camper. Now the price comes back down and you're not such a happy camper. But for me, it doesn't trigger a sell rule. It didn't go down enough to trigger a sell rule. If I didn't buy it here, I can buy it here. And my reasoning for that is, if I bought it here, I would still own it here. So Mox Nix, I can buy it here. Now the stock moved up from there. It found support again at the 50-day moving average and started moving up. Now the advantage for Lee, if he buys the stock here, is that by the time the stock gets up to the standard pivot point of this consolidation base, it's already up 20%. So my primary profit-taking sell rule is to sell this stock when it's 25% above this standard base breakout here. And that would be a price of $175.95. Since I'm already up 20%, my gain would be not 25%, but 52% if I bought it here. I don't have to do that very many times in a year, and it greatly improves my my overall returns. So I had early buy points here around 116, and that was a golden opportunity in this particular stock. Now, we don't know what it'll do here. It may never get to 175. I happen to think NVIDIA is going to end in a climax run, but that's just a personal opinion. We'll have to see. Now, what about capital risk? I'm going to zoom in on that buy point here, where the three moving averages converged, and the buy points here around the 50-day line. If I buy it at $116 a share, if it trades down below this low right here, I know this trade didn't work. You know, this isn't a standard base breakout. I just know it didn't work. So I can have a capital protection sell rule at 112, and that's a 3.5% loss rather than a 7% loss. So in this particular trade, this setup, I have a reward to risk ratio of 52% to 3.5%, or 15 to 1. That's 5 times better than the standard 3 to 1. That's one of the advantages of doing this type of early buy point and doing the work to find out and identify these. Now, NVIDIA also had a trend line entry point, and it has a 4-point trend line, which is better than most. I'd like to have at least 3 points on this type of setup. This has 4. And this is the early buy points I was talking about before, about 116. Maybe I didn't buy it there. Now it's climbing up. It's getting to this trend line here. That's another early buy point I can use. And you need to look each day to see exactly where you want to trigger in. I tend to use a broker buy stop with a limit if I want to do one of these, if I really want to own the stock, so I don't have to sit there and watch it trade every minute. And so that would be another early buy point on this stock. This is the third early buy point when it breaks up above here. Now, I'm not expecting to see the standard base breakout volume surge of plus 50% or more, but this had good volume that day. And the relative strength line is coming up. The other thing that was nice about this setup occurred on a weekend, on the Friday. This is the Friday here. So I had all weekend to contemplate this. What about capital protection risk on that trade? Well, I look at the buy point about 126.50, 7% down. I can't have a smaller one here. So I'm going to have the 7% risk, but I have a higher gain potential since I'm buying it early of 39% to 7%, which is about 5.6 to 1 or 5 to 1. Now, it's not 15 to 1 like the other one, but it's better than the standard 3 to 1. So you can see the benefit of using these early buy points. Now, I'll tell you where I bought NVIDIA. I saw this setup right here, and I put a little black arrow on my thing. I didn't have any buying power, but by the time it got over here, I did have buying power, so I bought it there. I made an add-on buy there. I still own it. We'll see where it goes. AppLovin. Amy mentioned AppLovin. This stock was very attractive. It was on the Grow 250 list. It's on an Abe Christensen 29% screen, which I'll share with you. And it was on the Grow 250 breakout today list, which is one of these lists I look at regularly, a few weeks before this. And the Abe Christensen 29% screen is looking for stocks that have high estimates looking forward. Abe Christensen got this from some portfolio managers at William O'Neill Company when he attended almost every master's class that they had. So the screen, this is a Marcus Smith screen. It's looking a custom screen. It's looking for 29% earnings growth estimate for the current quarter, 21% sales growth for the last quarter, and 29% earnings growth estimate for the next fiscal year. It doesn't, these parameters only change when there's earnings reports, so I don't need to run this screen that often, maybe once a month. Now, this is the AppLovin cup with handle base that I saw. And I call it a high handle. Bill O'Neill would just call it a handle. Market Surge called it a consolidation. But that's the setup I was looking at. This is a handle high trend line. That's a very common early buy point I use. And so I can buy this stock when it comes up above this trend line, and that's a little bit early, about 89.50. Zoom in on it, and you have to do these trend lines every day. You got to decide where the buy trigger is. I'll look at the 1 minute chart on this. This stock traded up pretty quickly that morning, and within a few minutes, it was up at 89.50. It traded there for about 10 minutes, and if I didn't use a broker buy stop, I had time to get into this. If I look at the capital protection, I'm not going to get a smaller number on this. I'm just going to get in a little bit early. It didn't matter much because that same morning it came up and triggered the standard cup with handle pivot point, and the relative strength line had a blue dot at a new high, and the stock had 130% volume surge. So I could have bought that breakout at the standard pivot point. Now, the advantage of buying early in this type of setup is I have less chance of triggering a capital protection sell rule. Bill O'Neill studied thousands of these setups, Canslim setups that break out. Most do never trade down to -7 or 8% from the standard pivot point. If I buy early, I have a better chance of the stock not trading down and triggering me out. If I buy late, I have a much higher chance that I'll be triggered out, because if I buy when it's 5% above the standard pivot point, it only needs to trade down about 2 or 3%, and it might trigger me out. This is where I bought AppLovin right here. And of course, the stock has had this big surge. I still own it. I use the time goal, which is on the bottom of page 241 of his book, 272. I just won't give you the page number because I'm going to screw it up. But I use the time goal, and it's not the certainty exception time goal. And so I haven't sold this stock yet. We'll see what it does. From where I bought it, I'm up 79%. And my time goal is here, so I'm going to hold it until at least that. Now, still looking at AppLovin, this stock was attractive because of this huge, powerful prior uptrend. Amy Smith pointed this out. It was up almost 140% in 18 weeks, you know, surging up more than 7% per week. You like to own this kind of thing here. And then it had this base here. It broke out and immediately failed. And then we had this shakeout. The first shakeout is a gap down day, scary gap down. And then this plunge all the way down to $60 a share. But then it bounces back that day. That's not a support day technically, but that's a shakeout that definitely gets my attention. And I'm looking for the shakeout +3 early buy point here. Now, it has an earnings report due here, so I can't buy it before that. And the shakeout +3 buy point on this stock, which is explained in the videos that I gave you the links to, is 5% above this number here. It's shakeout below that, recover 5%. Used to be just $3 for stocks between $30 and $60. Now, so I want to wait for the earnings report and see what happens here. Sure enough, after the earnings report, it trades up, and I could buy it right here at the shakeout +3. That's an early buy point. Now, the problem with that early buy point is the market's correcting. So I have to be willing to buy a new position while the market's correcting, and I am. As I mentioned, I'm a Canslim investor with the exception of the market factor. I will buy a stock during a market correction. As a matter of fact, sometimes I'll even have a full portfolio during a market correction. You need to figure that out for yourself. Now, my reasoning is this. Over the years, I know that I'm willing to buy stocks when the market's in a confirmed uptrend. So I'm willing to buy stocks right here. Well, after the market's been going like this, it's probably going to correct, but I'm still willing to buy stocks here. Well, if the market's been going down like this, there's a good chance it'll at least bounce. So I'm willing to buy stocks here. And then I have my sell rules to get me out if I'm wrong. So this is the early buy point here. There are 3 days, really 4 days, to buy that. The day after the earnings report, the next day, and the morning of this day. So I have more time to buy this right here. And if I didn't buy it there. I bought it over here. But from here, it's up 110%. So that's a really big gain, and it's a short period of time. If you calculate the compound annual growth rate, this is really phenomenally big there. The next one is Zeta. Zeta Global Holdings. It was not on any IBD lists or screens. It had a low EPS grade. It was on the Abe Christensen 29% screen. I find a lot of stocks on that screen. It was on the Market Surge Ants list. Amy talked about the ants 7 times before this. It was on the Market Surge Gap Up list 3 times. Those are lists that tell me that stock is really making a big move. One top fund owned shares in it. And it was never on the IBD stocks on the move list because it had a very low EPS rating. Now, this is the kind of move this stock had. And Amy mentioned, when you see the ants later in the run, that means the run's probably coming to an end. Well, sure enough, it went into a base. But this stock had a 140% gain in 20 weeks at about 7% per week. And then it went into this base. Now, this base is tight compared to this big move. This is very attractive. And Amy talked about what the ants signify there. So this is a very tight base here. I can see this gap up on the earnings report here. I'm very interested in this kind of stock. And lo and behold, Market Surge says it's a consolidation, but I see a double bottom here. That's a little shakeout right there. So I see a double bottom with a handle. And I look at the weekly chart. The weekly chart's very strong. There's powerful up weeks. And there's a very powerful week right here. And then there's 3 weeks tight in that handle. So I can draw a handle high trend line here. And I have the shakeout +3 early buy point here. Right there, it's at the shakeout +3 early buy point. So I can buy it right there on that day, shakeout +3. I could have bought it that day, this day, or that day. So I had a chance to buy it at the shakeout +3. If I did, I would still own it. It wouldn't have triggered a sell rule for me. And if I didn't, I could buy it now or wait till the next day. I also have this trend line. So I got 3. Then there's the standard handle pivot point right there. So I have the shakeout +3, the trend line, and the standard handle before it even gets to the consolidation base breakout. So I have 3 early buy points. The shakeout +3, the handle trend line, and the standard handle breakout, and then the consolidation breakout. So it gives me more opportunity to see this and get into it. I don't have to wait till this happens up here. If I purchase this stock in this time frame here, there's the 3 early buy points in the standard consolidation breakout. My rules would have had me in this stock and would have had me holding this stock using the 21-day exponential moving average as a price trigger using the Dr. Chris Ketcher method. And I didn't own this stock. So this is an example. I would have sold it here at it gapped down here, and the soonest I could have gotten the order filled would be 29. I would have had a 70% gain from the first buy point, 66, 60, and 59. So you can see from the early buy point, I had a much bigger gain than from the standard consolidation base breakout. Almost finished. If I look at the capital protection on this, from the earliest buy point, the shakeout +3, I could use a 6% capital protection, because if it traded down below this low, I know it didn't work and I could sell it. So I could reduce the risk a little bit there. If I bought that stock there and took it to where my sell rules would get me out, I'd have a reward to risk ratio of 12-1. Here are some others to study, recent setups that have early buy points. You can look at these yourself and contemplate how you might use early buy points on them. I'll take some questions now.
Okay, well, Lee, per usual, as always, as with all the other speakers, you did a fabulous job. Do you have to have volume on all of these early entry points?
No volume.
Okay.
Price only is my trigger. In fact, for all the buys I make, price only is my trigger. If I buy a stock at a standard pivot point, I want to see the type of volume that Bill O'Neill teaches us, plus 50% above average daily volume. But I don't wait to see that. I trigger on price. Now, if I buy it and then the volume isn't there, I always can sell it. I usually don't. If the price movement is okay, I usually hang on to see what happens.
Does the negative earnings per share on Zeta concern you?
Yeah, it concerns me. It's
Okay.
not, it doesn't wave me off necessarily. But I don't like to see negative earnings. And I didn't own that. I actually didn't own that stock either. So
okay. Is there a way to program the power of 3 in market search, or how do you find them?
well, you can program it in market search. Yes, there is a way. There is a setting you can go to and choose those 3 moving averages, and I've done that. And I have that screen in market search. I don't use it because I look at charts, and it's only pertinent to me if the stock has top Canslim properties and is got a, I sort of train my eyes to look for it. So I used to look at the market surge screen, but it's going to pick up a lot more stocks than I'm interested in. But you can do it in market surge. There's a setting you can do where you get the price relative to the moving averages.
So Lee, how do you find most of them? Do you go through the Growth 250?
I always start with the IBD 50 list. That's my go-to watch list making tool. Every week I start with the IBD 50 list. Even though Mike Scott and I have this focus list we do, I always start with the IBD 50. And it doesn't change very much from week to week, so it's easy to go through. And I go through and I look at the mini charts right in the paper, the PDF file. And then I have lists that I keep in Market Smith of we can have lists in Market Smith. I have lists of near a watch list. I have my watch list. Greg talked about he's got sort of a 30 stock preliminary watch list. Well, I have that. And then I update that during the week. The IBD 50 list is my go-to start. I look at the Growth 250. I look at all the IBD lists, the sector leaders, the IPO leaders, the big cap 20, and the sector leaders. Sector leaders picks out stocks that have strong relative strength. And so if the market's correcting, that's important to me.
Okay. And some people are asking for we've gone to the offer slide here that Jonathan has up, but some people wanted your links again. You'll get a recording of of this webinar. Everyone will be sent out to everyone. So you can see people that want the links to your, the recordings that you've made of the early buy points, they'll get that. Question here, do you reduce the size of your position for an early entry?
No. No, I used to scale in, and when I was doing my meetup, I talked about scaling in. I'll put this slide up here on this is the Petaluma meetup. You can just search you can just search for Petaluma IBD meetup, and you'll find that. Google search Petaluma IBD meetup.
Okay.
It's in the slideshow here too, which you'll all get.
Did you enter?
I just when I make a buy, I take my entire initial position in one buy.
Okay.
And early buy point, I take an entire initial position. It simplifies my life.
Okay. Did you enter NVIDIA with an early entry point? And if so, when?
I did. I entered it at the about 116 recently. I've owned NVIDIA a few times over the last couple of years, but recently, last month, or actually the 2nd of October, I bought it at about 116 and 20 cents or something like that. Okay. And I bought it at the power of 3 early buy point that I showed in this presentation.
Okay. Well, Lee and all the presenters, Lee, fantastic information as always. There's a reason why you are called the Moses of Canslim. Thank you just so very much for that's a terrific early entry points. I know everyone enjoyed it. A lot of people in the chat are saying thanks. And thanks to Greg and Kathy. They answered a lot of questions in the chat box. I appreciate that. So we have deals. If you, for some reason, are not getting the digital, please try it 3 months for $30. The Market DM is a newsletter that comes out daily. and gives you ideas for stocks and options, a little bit about what's going on in the market. It's a quick little read. It's very quick. 1 year for $20. You can hop on the IBD Live in the morning. It's a live show. It opens every trading day, a little bit before the open. 3 months of that for $9.95. And then, of course, my favorite, the Market Surge, the charting service that you've seen all of us have used today. Upgrade your investing with this fantastic platform. The earnings plot line and the relative strength and all of your earnings, everything is all on one page. It's so easy to use. So 4 weeks for $24.95. And just thanks for all of you for tuning in. What a great day of learning it has been. Thanks to Jonathan, and just great stuff. Thanks to all of you.